Good morning, everybody. It is Tuesday, September 24th, 8:46 a.m., and we are back once again on another market open. Folks, overnight, some things happened, and some things that you may not know about that have happened that I'm going to be discussing on this market open. But China turned on the money printer, and they turned on the money printer basically at around 11 p.m. Eastern. Some of you guys might have been sleeping. And that money printer is having some pretty big ramifications on U.S. equities this morning. Stock market's up, S&P's up, Japan is up, and you got Alibaba, which to me is like basically the proxy for the Chinese economy. That's up 5.65%. It's up 11% this week. So if you've been in Baba, you've been bag holding Baba, you've been kind of collecting more Baba, obviously based on the assumption that it's the most undervalued stock in the market, which it probably is, but there is that big old risk called China that is over determining a lot of the capacity for Alibaba to succeed. Well, you're up 5% right now. And if China can keep the money printer on and the banks and consumers and investors take advantage of it, then maybe Alibaba has higher to go. So we're going to talk about the money printer on China that they turned on and go deeper into why they did that and what that means. Palantir, we got a new press release this morning. Palantir was ranked number 1 in AI by Dresner. These reports are these industry standard reports. A lot of CTOs, CIOs look at these reports before they procure software. They want to trust Gartner, Dresner, these, I guess you could call them consulting firms around enterprise technology to figure out what enterprise software they should be procuring. And Palantir was ranked number 1 2 years in a row. So we'll talk about that, the implications of that. Obviously, $39 is on my mind today for Palantir. Why is $39 on my mind today for Palantir? Well, I'm greedy. And I know it shouldn't be, but with Palantir, we got to enjoy the moment and got to be a little bit greedy. Number 2, we're at 37.88 in the pre-markets, 37.95 we closed. Yesterday, we were at 38 for a good 90 minutes. Today, we topped out at 38.25 in the pre-markets. The momentum is there. China turned on the money printer. We're green right now. Maybe, the market turns red as we open, but it seems very possible that we break through 38. And then if we break through 38, then it just becomes a fun game if we can break 39. So we'll see if that's possible as well. And then we got to talk about Tesla. Tesla China is doing very well. Insurance registrations for Tesla China were up today. And as a result, good old Tesla is above 250. Closed at 250 on the dot yesterday. Now it's at 254. It's up 2%. 270 is the 52-week high. 1010's coming up in about 16 days. The catalysts are there, ready to go. On top of that, we talked about this a little bit yesterday, but Constellation Energy brand or Constellation Energy Corporation was up 30% last week because they signed a deal with Microsoft. Now, what does that have to do with Tesla? Well, they signed a deal with Microsoft, particularly because of AI energy demand. Tesla's energy business is growing 100% year over year. I'm not saying it's going to grow 300-400% next quarter, but it is growing. And if the market wants more energy, and Tesla is one of the core providers of solutions for energy in a world in which we don't have enough energy for all the training we need to do to build AGI, then that is a moat that I think is very valuable for Tesla. So we got a lot to talk about, a lot to get into. Thank you, everyone, for being here. Yes, Chris Camillo will be on stream today. He confirmed last night, if nothing changes, then at 10:30, Chris Camillo will be joining me on the stream, and we'll have a good 45-minute to hour-long discussion on Palantir, which is going to be really fun. I'm looking forward to that a lot. Chris Camillo, again, for those that don't know him, some of you guys probably do. For those that don't, he's the founder of Dumb Money. He runs that channel with his friends. They kind of do it for fun. They're not really YouTubers. They made a lot of money in their investment careers. Chris is known as the guy who took 20,000 to 60 million, actually, which is just insane. And he did that based on social arbitrage or finding trends that people did not know about before they became big. He doesn't really look at the balance sheet. He kind of invests based on stories and theses, and it's worked out for him. Everyone has different styles. It works out for him. And so we'll talk about his thesis on Palantir today, and we'll go deeper on why he's getting more bullish for Palantir. Thank you, everybody, for being here. Bobby, Broccoli Bob, Midwest, Colorblind Collector, Deacon, Blake, PG Investments, Angad, P. Thomas, Gene, what's up? Arun, Tesla, Joseph, green September second half. Well, we got about, 6 days left of September? Let's see. Do we end out green for the month? This would be the first month in 5 years where we end green in September, which would just be absolutely incredible. All the economic indicators of yield curves uninverting, or this happened versus that happened, or this PCE data says this, and that. All of those indicators for the past couple of years have basically not been accurate in predicting what will happen in the future. Sometimes they've been accurate, but over the past 2 years, most of them said recession, and maybe we don't avoid it. Maybe it happens in the last couple months. Maybe it happens early 2025. But if we end out green for September, it will be another indicator that the leading historical indicators or the lagging historical indicators have not been as historically accurate, at least for this cycle. And that's because, in my belief, we printed a lot of money. We raised rates really quickly. When you do that, a lot of wonky things happen in the system. And then on top of that, besides that, we also had AI come out of nowhere. And that kind of messes up everything as well to the upside. So we'll see how September ends out, but it's been a pretty decent September so far. I'm Beneficial. What's up? Francisco, Blake, Nolan, Martin, Tesla. Thank you, everybody, for being here today. Benny, what's up? Good morning. Stanley, what's up? Andy, Ramos, Dexter, Kyle. Thank you, everybody, for being here on the Market Open. Let's talk about China, because we've got some things to talk about China. So this was really interesting. And then after China, we'll talk about Palantir, because we have a couple things as well to go into for Palantir. So Xi Jinping, first of all, the preview to the story is that everyone knows China's economy is trash, and we've talked about it on the channel many times over the past couple months. You've just seen the average middle class family in China have their net worth either go down or basically be stuck and flat because they really don't have any assets they can invest. China has banned Bitcoin. China has, put on a lot of restrictions. China tanked Tencent, which is one of the most valuable companies in China, by 15 billion in one day because they put some regulations on for video games. Like, their economy's been in a tough situation. And if you look at the real estate element of China, a lot of towns, like entire towns and cities, have apartment buildings that are not filled with people because of the real estate crisis going on right there. So what did China do? They did 3 things that are going to try to change their economy to the upside. Number one, the People's Bank of China cut, which is basically like their Fed, cut the 7-day reverse repo rate to 1.5% and lowered the reserve ratio requirements by 0.5%, so 50 bips, injecting $1 trillion or 137 billion. Now, remember, they did this 8 months ago, and they put in not $1 trillion, but like 800 billion yuan into the market. So they did this at the start of 2024 as well to boost liquidity. Basically, this means the government is putting more money into the bank so they can lend more. So when you lower the reserve ratio requirements for banks, they don't need to have as much money legally inside of their reserve ratios. Remember, the reserve ratio requirements are important because if anything were to ever happen, if people want to take their money out of the bank should have the ability to give that money back to people. When you lower it, that means banks can lend out more money. When banks lend out more money, people can take more loans. When people take more loans, they might end up buying a Tesla or financing a home, which means Tesla gets more money, or BYD gets more money, and they pay more taxes to the Chinese government. Like, it all stimulates the economy. And so people thought it would be by 25 bips. Today it was by 50 bips. It also came faster than expected. People thought this would happen in 2 weeks. This happened yesterday night. So this was one thing that was really good for China. Number 2, a potential 0.3% cut to the medium-term lending facility, MLF. I read that as MILF this whole morning. Take what you want from that. But yes, the medium-term lending facility is expected to reduce borrowing costs for banks. Basically, this means banks will pay less when they borrow from the central bank so they can give cheaper loans to people. And again, cheaper loans to people is obviously very good because if you have cheaper loans, more people can do more things. And then finally, the minimum down payment for second homes dropped from 25% to 15%. In America, I think the average down payment is 20%, but there's a lot of loopholes. You can do 5% if you're a new home buyer. There's a lot of different things. But China said, hey, instead of having to put 25%, you can put 15%. This eases mortgage costs on $5.3 trillion of loans. And it obviously stimulates housing demand because now if you only have to put 15% versus 25%, you can have the rest of your money doing other stuff. You can put less money on a down payment and you can start engaging. At least people can get more excited about investment properties or even getting their first home. Basically, this means it's cheaper for people to buy their second home, which is obviously very good because you want more people spending more money, having multiple properties, and just from a real estate perspective, given how many apartments are left for dead in China, if you can get those people to start getting buyers for those properties or even renters, that is obviously a very good thing. So what happened after China did this? What happened? Number 1, the CSI 300 index surged over 4%, and the Hang Seng China index saw its strongest rally in over 6 years just because of these stimulative efforts by the Chinese government. FXI is the ticker symbol in America. It is the iShares China large cap ETF. That's up 5.7% right now. So FXI, if you just want to have a proxy to check China, it has $4 billion under management. It's been open since 2004. And basically, if you want to go long China or short China, this is the ETF that you would look with to make it really easy, right? So FXI, that's up 5.7% right now. Over the past week, that's up 11.2%, almost very similar to Alibaba, up 5% today, up 11% over the past week. Alibaba right here, obviously up 5% today on this news. And then US futures went green, and then Bitcoin also went up 1%. Now, why did Bitcoin go up 1% if people in China can't buy Bitcoin, even though they have a lot of liquidity? Couple reasons. Number one, people in China still find a way to buy Bitcoin. It's just you have to, do certain things to get your Bitcoin. You might have to go to certain provinces or jurisdictions, but people will find a way to get their Bitcoin, and they have more liquidity now to get that Bitcoin. Number two, in general, opening up that money printer in China, and I know the United States has not literally opened up the money printer because we only reduced by 50 bits, but 50 bits was still a decent amount of a reduction. It just means in general, there should be more global liquidity. So for example, if I'm an Italian guy living in China and I'm bullish on Bitcoin, I'm actually saying this because I have an Italian friend who's like super bullish on MicroStrategy, but he travels back and forth in China for work. When he goes to China, he probably can't, buy Bitcoin, but his law firm is in China. And if his law firm starts having a lot more business because his law firm has all these, his law firm is able to take out more loans, or the cost of capital comes down because of the reserve ratio requirements going down for Chinese banks. And that stimulates the law firm. The law firm gets a ton of more demand. Maybe there's a lot more real estate deals happening because of the second home mortgages going down from 25 to 15%. So his law firm ends up, negotiating more deals for their clients. And then he gets paid more as a commission on his deals, or he gets a bonus or whatever. When he goes back to Italy after he's done working in China, he can go buy some Bitcoin. Well, why can he buy more Bitcoin? Because he has more liquidity. Why does he have more liquidity on a personal level? Because his company did well. Why is his company doing well? Because China is trying to make sure all companies can start thriving and succeeding in that economy that has been decimated for the better part of 3 years. So in general, we should be opening up tons of liquidity based on what China did today. And that should lead to momentum in assets like Bitcoin and overall risk on assets. As you see right here, Bitcoin up, it's up slightly today. At one point, it was closing in on 64,000. I heard a stat yesterday on Bitcoin, and that stat is from my good friend Carlos. I was on the phone with him yesterday, and Carlos said every halving cycle, September 20th is the price that Bitcoin is on, or whatever price Bitcoin ends on September 20th. Bitcoin never goes lower but below that price every halving cycle on September 20th. So on September 20th, I think the price was like 62,500 or something. If history is right, then Bitcoin's not going below 62,500 because every halving cycle, Bitcoin stays above that level for the rest of the cycle, which ends up being about 300 days. So if that's the case, I mean, look, maybe that's wrong, and maybe some event happens and Bitcoin crashes, and maybe that historical indicator isn't going to be accurate. But it's happened for the last couple halving cycles. This China liquidity news only makes it more easier for people to have the chance to buy Bitcoin. And so when you put those things together, it's obviously very, very bullish. Am I talking too fast this morning? Am I? We got 2 comments. See, Inbound knows. Inbound's like, he's not talking too fast. He's always this cracked up. I don't know, dude. I didn't do anything special. I woke up early this morning. I guess I woke up early. I woke up a little bit earlier than usual. I woke up at like 5 versus 6:30. But the point is, China opened up the money printer, and maybe I'm just excited that they opened up the money printer. Maybe that's why I'm excited. I mean, look, it's very bullish, dude. This is the first time a global hegemon outside of the United States, which we didn't really open the money printer. We just cut rates by 50 bips. This is the first time someone acknowledged that we are really going for maximum stimulus. And what China did today was way beyond expectations. And not only was it way beyond expectations, it was faster than what the market expected. And so as a result, obviously risk assets can benefit from that. Now, here's the question for the chat. Here's my big question for you guys. Do you buy Chinese equities based on this move? Do you buy Chinese equities based on this move? Amit was hanging out with the Palantir short sellers last night. Dude, I was on the phone with a guy last night who is up a lot of money on Palantir. Let's just say that, like up a lot. Okay. And he called me and he's like, if I sell, I'm going to have to pay a lot of taxes. I'm like, yeah, you're right. You will. He's like, what if I do covered calls? I was like, you can make a lot of money doing covered calls, but is it worth, the pressure right now if you have to give up the shares? I mean, he would make a lot of money, dude. He would make a lot of money, even on half of his position. And so I think he ended up deciding, you know what, I'm just going to hold it for the next 3 years and I'll be up even more. I was like, that's also a really good option. Maybe it comes down in the short term, but you'll be up a lot more. So Yeah, I was not hanging out with the short sellers last night, but we'll talk more about Palantir. Palantir at 38 is giving people a lot of conundrums in terms of what they should do with their gains. Okay, most of you guys are still saying no. Where's Neo? Where's Neo? Neo right now. Neo, wow, Neo's up 6%. There you go. Shout out to TJ. I know TJ has a lot of Neo, so TJ should be enjoying his Neo gains this morning. So most of you guys are saying no. I agree. I still would not buy Chinese equities. But it is enticing not to buy, but it is enticing just to look at what China's doing, because if they go even further than this, Bob was already the most undervalued company in the world. I'm not buying it at all based on this news. I just don't trust China. But I could see a world where China really decides that they're done with their economy being a piece of crap over the past couple of years, and they want to start taking things further, and they keep stimulating. The problem is, at what point does the stimulation lead to issues, right? Whether it's inflationary issues, whether it's foreign investment still not being attracted to it, whether it's people kind of pumping and dumping on the stimulus news, but it's not a long-term fix. At what point do the banks kind of get into trouble? Remember, Silicon Valley Bank collapsed because interest rates were zero and they got super greedy with giving out loans at 0% rates and yada, yada. And then interest rates went up and they got screwed. At what point do some banks in China get a little bit too risky? And then you've got customer deposits that, end up being in jeopardy. Like, there's all these things they have to balance, which is why I think it's tough to make the investment into China, but it is obviously very bullish for China. And so if you're in Chinese equities and you're just holding for the long term, then I think this is Michael Burry. I mean, he has a lot of Alibaba, JD, Baidu. He's doing very well this morning as China continues to go higher. So that's what we got right now in the world of China. You're an OG Neo bull. I am. I bought Neo at $1 in 2019. As you guys know, it went to 60 at one point. Sold it at like 6. My average was 3 though, so it wasn't a 6x. And I sold it for like $2,000, which was great. At 20 years old, $2,000 was incredible, but could have been like a lot more than $2,000. But in general, Neo getting back to $60 is going to be hard to see, but Neo getting to $10, $12 with more China stimulus, it's very possible. I mean, I don't think that's crazy for that to happen either. But it seems like the majority of you are saying no to China. I would agree as well. But this is obviously very bullish for China. So that's what we got in the context of Chinese equities. Look, if you've been a bull on China, this is what you wanted to see. Xi Jinping woke up and he chose violence. He said, we're coming for everything. We are really going to try to get this economy in the right direction. Again, cutting the reserve ratio requirements, cutting the medium-term lending facility, making banks pay less when they borrow from central banks, and then lowering second home mortgages from 25 to 15% on down payments. You can't really ask for that much more from Xi Jinping. So that's what we got in the world of China. And the United States is going to cut by another 50 bips probably in the next couple of weeks or after the election. Again, dude, I feel like things are lining up. If unemployment doesn't get aggressive and we stay at 130, 140,000 jobs a month, maybe we avoid the recession for the next couple of months. 2025, we'll see what happens. If earnings are good in Q3, which we have to talk about a couple companies that reported earnings this morning, I think 2024 still ends out pretty nicely. Thoughts on Intel? Where's Intel right now? Then we'll talk about Palantir. Intel is down a little bit. Intel was up 3% yesterday. So I talked to Steve last night. He likes Intel. He bought more Intel yesterday. He thinks it's an obvious recovery play back to 50. I don't know if I'm fully on board with that thesis yet. He believes his thesis is not even the chip business. His thesis is like the foundry business. His thesis is the amount of chips we need in the AI upgrade cycle, not for phones, but for PCs. You're going to need Intel. I mean, AMD is going to play a big role in that, but Intel is going to play a massive role as well. And so from that perspective, he believes that just on that thesis alone, Intel should do better. So I'm not in it, but look, could I see it recovering? Yeah, I could see it recovering. It just might take a little bit of time for it to get there for Intel. Okay, let's talk about Palantir. So thank you everybody for being here. Palantir right now in the pre-markets, 13, not 13. Oh boy, if it was 13, I think we would be selling a lot of stuff to buy some Palantir. $37.95 on Palantir. I think there's a shot for $39. Bloomberg talked about Palantir yesterday. I thought this was a very interesting segment that Bloomberg did. A little bit cringy, but it's okay. Let's get through it. Here's what Bloomberg had to say about Palantir yesterday. Did he sell his new bank? I didn't even know Steve had new bank. I don't think he sold his new bank. I'll ask him, but I didn't even know he had new bank. All right, here's Bloomberg on Palantir.
As you know, I've spent a lot of time with Dr. Karp. We can get into him as a person, we can get into the company, but what was it you were trying to do with this profile in the magazine? It's a fascinating read.
Right. So as you said, this has been a long time goal of Karp's and the companies to join the S&P. And what's interesting is the huge split between the way traditional Wall Street investors, institutional investors approach the company, and the retail investors, who he calls tendies, who have created.
So that was the first cringe part. He does not call retail investors tendies. He says retail investors are sitting on gains, aka tendies. Tendies is just another word for money. So when he says people are investing their own tendies, they're investing their own money. And retail investors have a lot of tendies on Palantir over the past couple of years, but retail investors are not literally called tendies. So that was the first part where she made a little mistake there, but that's okay.
This massive following for Palantir and all things Karp, including Reddit's calling him Dr. Daddy Karp and the like. And
that was fun to hear. Hearing a Bloomberg reporter say that was kind of fun.
And this kind of irreverence that he has carried through, and he promised he would when he went public, and he's carried it through to today.
The best bit is if you scroll all the way down to the bottom of your story and the link, the YouTube link.
I'm going to fast forward because they're just going to play Karp, and then we'll go back to the analysis. All right, here we go.
See him powering his way through the woodlands with those poles, Lizette. But that speaks a lot to his desire to work against, in many ways, Wall Street, but now he's having to appease them at the same time.
Yeah, that's right. And it's interesting because a number of retail investors do back him for the same reason that institutional investors are not backing him at the same pace and fury. And it really breaks down to two things. Number one is tech. And number two is leadership. Now, on the tech side, a number of institutional investors simply don't believe the Palantir's claims that its AI sales are going to hit the traction that they say that they're going to, both on the commercial side and also in the government. We got to remember that Palantir, for the first time this year, is going to be making more money from its commercial customers than it has in its government ones. Now, on the personality side, there are some institutional investors, some analysts that simply don't like the irreverence that Alex Karp brings to the table, and have also questioned his management style and some of his judgment calls, including the ill-fated SPAC venture that they launched about 2 years ago. And some analysts say that they still haven't completely taken their lumps on, even though they have reconciled it on a financial basis.
Team in New York, let's just play it again. Alex Karp walking through the woods, because it is him. It is absolutely him. He's unusual. He doesn't behave like a typical S&P 500 CEO. He's very outdoorsy. He has moved himself and the company to a certain extent away from California to Colorado. But he still delivers. He's combative. Just explain more to me about him as a leader, as a person, and why we care, why we've written a Business Week piece.
Right. The interesting thing there's so many things that's interesting about Dr. Karp or Alex Karp, but one of the big ones that really is important to focus on is the fact that he, along with his two co-founders of Palantir, Stephen Cohen and Peter Thiel, have structured the ownership of this company so that they have super voting rights and perpetuity. They did this when they structured the company to go public, and when the S&P relaxed the standards, allowing for multi-structure shares to be accepted, Palantir was admitted to the S&P with that. So we do care about him because he will continue to control it.
So that was a little bit more of an awkward piece that I've seen done on Palantir. It was just, I don't know, the vibes were not the best on that one. But a couple things from this. Number one, the super voting shares with the F-class structure, I think, was one of the smartest things Palantir could ever do, even if it stopped them from getting into the S&P 500. Eventually, notice the S&P 500 capitulated to Palantir. Palantir did not capitulate to the S&P 500. Palantir did not change their voting structure to try to get into this index. The index changed for them. Why? Because the index knows that Palantir is one of the most amazing companies in the world. I don't think they literally changed for Palantir, but the point is they realized, hey, these founder-led companies, they're going to be very important in the future. We can't let them not be in the index, especially if they become bigger and bigger and bigger. And also it saved them from investors forcing them to make bad decisions, which is a very important thing when you have the type of technology that Palantir has. Number two, what's really important in that analysis is what she's highlighting is the difference between retail and institutional investors. So again, this chart I shared yesterday from the Bloomberg piece that was done on Palantir shows that 35% of Wall Street firms are still pretty bearish on Palantir. I mean, we see a lot of buy ratings by the Marianas and the Dan Ives of the world, and even Citibank and Jefferies are starting to come around. But 35% compared to all the other tech companies right above Palantir combined are more in favor of selling Palantir versus buying it. So the highlighting that she did between institutional and retail investors was summed up from her perspective in institutional investors don't believe in Karp when he says he's going to do XYZ, the retail business or the commercial business is going to grow, yada, yada, whereas retail investors do believe him. And I think it's such an interesting thing because it's like investing is all about belief. It's about belief in the company, belief in the vision, belief in the idea, belief in the management, obviously, belief in the CEO, belief in the founder. But most importantly, in my opinion, investing is about believing at the right time. Because you can believe when Palantir gets to 37, then it's pretty obvious, right? And I think Palantir will still do well over the next decades, but it's not like believing it when it was $6, $7, $8. That's when the alpha, just from a pure mathematical perspective, is there. You know, now for Palantir to 2x, you got to get it to 70, $80. For Palantir to 2x from 6, you just had to be there and it had to go to 12, right? And even then, at 6, it almost felt impossible to go to 12. And that's where it required a level of insight and looking beyond the horizon of, hey, is there something greater here? And what she highlights is that institutional investors did not believe in that potential, that the probability of those futures to exist. And maybe you can't blame them. Institutions are institutions. Some institutions took a risk. Most of them decided not to. Retail, for some reason, did believe. And I think that's why it's so exciting. Now, the other reason it's so exciting that retail did believe is because we got some good news from our friend yesterday. Our friend that, they're really popular in the winter. In the summer, they end up melting. But unfortunately, in the fall, they end up melting. And we'll see what happens in the winter. Snowflake yesterday. Oh, wait, it is the start of fall, right? September 21st is the start of fall. So we are officially into the fall. Snowflake puts a $2 billion convertible debt offering. And this part had me dead yesterday. This part actually had me dead yesterday. The company plans to use the cash for capped call transactions, share repurchases, and general corporate purposes. Now, remember, Snowflake offering a $2 billion convertible debt offering is very good for them because their stock is low. That's when you're supposed to do it as a company. The problem is that I was reading a little bit through the filing and they said, hey, we want to get rid of the excess dilution that we're doing, aka the massive stock-based compensation. And so injecting $2 billion of liquidity is going to help the company be able to navigate this situation. The problem that's fine and dandy. The problem with me was like, you're diluting people to then do share repurchases. Like if they just didn't say they were going to buy back their stock with this $2 billion, I would kind of be like, all right, whatever. But the fact that they're diluting you just to buy back their own stock so that they can show on the earnings calls that, hey, we bought back our stock. Look, we really care about shareholders. It is asinine. And it is quite literally what some of these propped up Wall Street companies do. Again, Snowflake is not a horrible company. They're going to do $4 billion in revenue. They're a very important company. They have over, 10,000 clients. It's just this financial engineering to me has wrecked investors. And if as retail, you chose what Warren Buffett told you to buy, not literally, but you get my point, the institutional investors versus what retail crowded around, you would have been stuck. And you would have obviously been down on the investment. Snowflake is down 50% all time. Palantir is up 278% all time. And so I think it was just incredible that now Palantir is getting covered on Bloomberg, on CNBC, all these mainstream media outlets. A couple of weeks ago, I made the long 30-minute video talking about the compounding media effect on Palantir. I think we are just getting started. Since then, we've had Bill Maher. That video came out the day before the New York Times. I didn't even know that New York Times article was coming out. We've had AIPCon. We've had CNBC, had massive coverage. Bloomberg has had massive coverage. Yahoo Finance has done massive coverage. Like, it's just expanding. Wall Street Journal wrote an article. It's going to be insane over the next decade, especially if Palantir if they can continue to keep executing and increase the growth rate to closer to 35 to 40%. And I think retail is going to keep winning. Now, there may be a correction in the short term. I still think the shares are obviously a bit extended right here, but I don't think this is going back to $6. Like, I don't think this is going back to below the DPO price. And because of that, there is now a margin of safety. There is a hefty investor base that cares about it. For goodness sakes, it's in the S&P 500. So even if you were to get a 20, 30% decline, you would have some institutions at least perk up on the idea that they could get cheaper Palantir shares. And I think the story continues. And it's just going to be really fun to see how the story plays out over the over the coming years. Someone says, I wouldn't want an average of 37 right now in Palantir. I'm at a 27 average price. So if a share price matches average price, why buy more? I mean, yeah, that's fair. Look, at the end of the day, if you have an average that is below the current price right now, you have to decide if you want to average up right now. I don't think anyone should have FOMO. I mean, look, the market gives a lot of opportunities. Palantir has been a runaway freight train the entire year. You would imagine there are some opportunities. I mean, August 5th was an opportunity. After earnings was an opportunity. Like there's always been after earnings in Q1. There's always been opportunities. Now the cat's kind of getting out of the bag. Like the cats are really getting out of the bag and everyone's kind of figuring out, as Fritz says, financial engineering at its worst. That's correct. Everyone's figuring out the story of Palantir. And so I don't know if it runs away to 50 valuation wise, that doesn't make sense, but I don't know if it goes back to 30 either. It's one of those things where you kind of got to sit back and enjoy the ride. And if you really want to get more exposure, then you have to have the mindset that, hey, this 37 could go to 33 tomorrow. It could go to 45 tomorrow, but you're going to sit tight and kind of just let the story play out. Jed says Rocket Lab will be bigger than Palantir in the next 10 years. Who agrees? Jed, that's a spicy comment for the chat. All right, so I have another question to ask after this, and then we'll move on from Palantir. But who agrees? Rocket Lab bigger than Palantir? Rocket Lab's what, 3 billion? Palantir's 80 billion. So in 10 years, I would say, I don't know, Palantir gets closer to 400, 500 billion. If they really hypergrow, maybe $1 trillion. I know that's like really out there, but let's assume at least 400 to 500 billion. So it's a 5x from here. Rocket Lab to get to 400 billion. If we assume that Palantir will get there, that is a 120x, given it's worth 3 billion right now. I don't know, maybe, or maybe a Palantir stalls at a 250 billion. Rocket Lab goes up 40x right here. I don't know. We'll see. Maybe we'll see. The space TAM, you could argue, is bigger than software's TAM, but I don't think of Palantir as a software company. I think of them as an enterprise AI play across every single vertical, which means the TAM is quite literally unlimited. There is an article, by the way, that I read this morning. I'm not going to pull it up right now because I'm still diving through it. One of the most respected tech journalists on the planet. I'm not talking about Bloomberg. I'm talking about like one of the most independent tech respected journalists on the planet wrote a piece on Palantir today. And I haven't finished reading it, so I don't want to talk about it yet, but he's pretty fucking bullish Palantir. And again, when I mean respected, I mean this guy makes probably a couple $1 million a year off of his Substack because people are willing to pay just to learn, just to get his thoughts. So I'll talk about that probably in a video coming up. But you have a lot of people waking up to the story and getting a bit more excited about what's going on. Okay, final question here. I'm curious what you guys have to say. I asked this poll on the market close, but I want to ask this in the market open. I asked it on Twitter last night. If you had a choice between Warren Buffett or Nancy Pelosi buying Palantir, which one would you pick and why? I was shocked. It was actually 50-50 here. I mean, Pelosi's winning with 4,000 votes at 52%, Buffett at 47%. I felt like there's a very obvious answer, but apparently it was 50-50. For me, the obvious answer is Pelosi. Like I think she knows more about the government. I think if she buys, that means we're getting a lot of government deals, and I think it's an obvious signal to buy. If Buffett buys, I mean, like Buffett's capital is good, the name recognition is good, but it wouldn't make sense with Buffett's thesis. And I don't know if investors would respect the buy. Also, he, went into Snowflake. Snowflake didn't really work out, so I think a lot of people will be questioning what is he doing in enterprise SaaS. I think Pelosi buys. That means she knows we're about to moon, because we're about to get a lot more deals. And so for me, that's why it was very obvious. But you got a lot of people that love Buffett. And I can't deny, I mean, like when Buffett invested in Apple, the amount of people that started to swear that Apple was the greatest company. I mean, remember, but you think Palantir is a cult. The Buffett cult, like the Berkshire cult is extreme, dude. I mean, they sell out arenas for their annual conference. So you've got a lot of people that are just going to copy whatever Buffett does. And that would bring a lot more money to Palantir. The question is just going to be, if that overall makes sense versus someone like Nancy, who knows a lot more before she invests. He does have close to 300 billion in cash. It's like 280 billion or something right now. So we will see what he does with that money. Okay. Some of you guys, basically you guys are 50-50 in the chat. Some of you are Pelosi, some of you are Buffett. So makes sense. 50-50 based on these polls. Okay, cool. So that was the Palantir stuff. Let's move on to a couple other things. One last thing on Palantir that really doesn't have to do with Palantir, but well, actually, no, there's two last things on Palantir. Okay, so real quick, and then we'll move on to macro. So Palantir did win number 1 from Dresner, ranked in AI in machine learning. So Palantir Technologies, a leading provider of AI systems, today announced that it has been recognized as a top performer by Dresner Advisory Services in the 2024 AI Data Science and Machine Learning Wisdom of Crowds market study. This, like, it doesn't matter that much to the average person. I don't think the stock's going to, tick up on this news. This matters to the CIOs and CTOs at some company that are thinking of getting Palantir or Snowflake or Databricks, and they pay thousands of dollars for these Dresner Gartner reports. They read it, and then they go and they have a call with Palantir because they realize, hey, maybe we should look at Palantir if they're ranked number one. So it's a good thing for industry standards. And obviously it is potentially leading to more business for Palantir. Final thing I want to show right here is Anthropic. So it looks like Anthropic, which is another foundation model creator, just like OpenAI. Anthropic, I believe, has the model called Claude, and OpenAI obviously has GPT. They are looking to be funded at $40 billion. Now, Amazon just put in a couple billion into Anthropic, I think $4 billion, like a couple months ago. OpenAI is trying to raise $7 billion at a $150 billion valuation. And obviously Anthropic, which is not as big as GPT, but people are saying Claude 3.5 is getting as good as GPT 4.0. They are trying to raise at $40 billion. I'm pretty sure Anthropic is not profitable. OpenAI is definitely not profitable. Their revenue growths on both the companies, I would imagine, is triple digits. So that's like the way you justify the valuation. And you justify that, hey, you need a competitor to OpenAI, because if OpenAI goes at it with no one competing with them, then they're going to win. Why does this matter to Palantir? As much as all of us agree that the valuation stretched on Palantir, especially on Friday when I said, what's the AI company that's going to collapse the U.S. economic system because it's so overvalued, and every comment was Palantir. Palantir's worth $85 billion. Anthropic's worth half of that. And I really doubt unlocking the type of value that Palantir is unlocking in the enterprise where all the money is. Remember, the money is not in the $20 a month subscriptions. Maybe for OpenAI, because they just have so many users that they're going to build this massive business off people paying $20 a month. But that's not where the money is. The money is BP giving you like $50 million for the next 5 years because they need your software, right? And getting thousands of those types of clients because it's that transformative to BP to be able to pay that money. If Palantir is worth $80 billion, which is only double of Anthropic, and they're worth 60% less than OpenAI, I think public market investors are looking at Palantir's valuation. And we'll talk about this with Chris Camillo today. And they're saying, hey, on the private market, if I want to invest and get exposure to AI, I have to pay $40 billion or $150 billion for companies that are not profitable. I don't really know the financials, and I'm just kind of taking this bet that it's going to work out. In the public markets, every 90 days, I get to see financials. I get to see the CEO talk. I get this massive community of people that are making videos about the company every day and are tweeting about it. And then I look at the market cap at $85 billion. I am not saying $85 billion is cheap. Let me say that again. I am not saying it's cheap. I'm just saying one of the ways some people might be justifying the investment at $38, because someone's buying it. It's at $38 in the pre-market. Someone is buying it. It does not get there unless someone is buying those shares. Someone might be looking at it and saying, hey, if AI is going to be this big of a deal, then do I really care about paying $85 billion if I think it's going to be worth $1 trillion? If you think it's going to be worth $1 trillion or $2 trillion, $85 billion theoretically is cheap. If you think it's going to be worth $300 to $400 billion, the risk reward isn't amazing, especially for the opportunity cost of your time. And I think right now the market's trying to figure out how to navigate all of those different conflicting ideas. But the private valuations being as high as they are, that doesn't help. That doesn't help. I mean, I think Perplexity is raised. I think Perplexity already raised at $3 billion. Perplexity does 250 million queries a month. Google does 8.5 billion a day. By the way, Google was down 1% yesterday when Perplexity came out and said that they are now doing sponsored AI questions inside of their app. That's not taking away a ton of Google's market share, but it's what Google investors are afraid about, because at the end of the day, if Perplexity starts, or a company like Perplexity takes away some market share, Google only has market share to lose at that point. Google right here up about 0.5% in the pre-market. So my point is, there is a way to justify Palantir's valuation without looking at the PE and price to sales. It's more qualitative than quantitative, but maybe that's okay, because maybe the story is going to be more qualitative over the next decade, which will allow Palantir to grow in from the quantitative perspective into the story. It just might take more time. And we will see. We will see how this ultimately plays out over the next coming months and definitely over the next coming years. Does the market not care about World War III starting anymore? No, I don't think so. I don't think the market cares. There was a bunch of stuff that happened in the Middle East yesterday. Obviously, everything that's been going on with Lebanon and Israel over the past couple of weeks. The market, Bitcoin definitely doesn't. You would think Bitcoin would really be pricing in that geopolitical risk in an aggressive way. Bitcoin doesn't care. I mean, the market so far has said they really are not that interested in World War III. Now, if it happens and we get close to it, then yeah, we'll see the market tank probably. Ironically, Palantir might go higher if that happens, which would just be crazy. But so far, the market doesn't care this much. So far, the market does not care that much. Thomas says, Palantir is going to 50 sooner than you think. Valuation or not, this company's revenues are reoccurring and growing exponentially. People underestimate the momentum in the software results. I will agree with you that if earnings growth and revenue growth excel from higher than 30% next quarter, yeah, I think if it's 35%, we're going to 50. I think the momentum is going to be there. If we're stuck at 27%, which they guided for 25%, so if they even beat by 2%, that's good. I think they're going to get to 30%, though. I don't know what happens to the shares, but I think there's a shot they do go higher from here. That's why when I was talking to my friend yesterday, who again is up a lot of money on Palantir, and he was thinking, hey, if I sell, I have to pay a shit ton in taxes. There's no point in selling. What if I just sell some covered calls? Even the $50, dude, people are willing to pay $100 for a $50 covered call by January 2025 after Palantir has already ran up 120% this year, meaning it would have to run up another, 25, 30% to get to that $50 range. I mean, dude, even that covered call it's getting a little scary because it's like, what if it happens? Now, again, my opinion here is that if you have a covered call from even 32 to like 40, you're going to be okay. I think there will be situations to navigate that. You just have to be very patient. That's the name of the game when it comes to covered calls. But I mean, if it did go to 50, like, those covered calls are underwater as well. So I think until people see Palantir get corrected, they're not going to believe it can get corrected, which is kind of just a self-fulfilling prophecy because now I get excited and say, hey, maybe we get to $39 today. We're at $38.07 in the pre-markets. We'll see what happens. But it's one of those things where the market's going to have to see it. And again, with rate cuts coming down the pipeline, that's just bullish for the overall market, which is still obviously bullish for Palantir as well. All right, we got 4 minutes until the market opens. Let's run through some headlines. Thank you, everybody, for being here this morning at about 10:30. So in around an hour, I believe I will have Chris Camillo coming on to the show. He just asked me to send him the YouTube link, so we will definitely have him on. Let me send him this link right now. And we will be able to talk to him in depth about his thesis on Palantir. So we got 3 minutes. Before we get into that, I want to run through a couple of upgrades and downgrades we got in the stock market today, because we got a ton of stocks that got a little bit of momentum. AutoZone had earnings. AutoZone missed on the top line and the bottom line. However, AutoZone has it's up right now. AZO. Let me know if anyone owns this stock. Again, they missed on the top and the bottom line. Oh no, never mind. They're down 4%. Okay, so they were up 1% like an hour ago, but it's been an hour since I checked. So it makes sense. I was kind of surprised they were up 1%. I was like, hey, they missed on both metrics. We'll go into their earnings, but they're down about 4% right now. Kind of makes sense given how auto insurance has started to trend upwards, even for new cars and used cars. So we'll get into the earnings and see what happens. Lee says, Amit, you have been to 2 AIP cons in a row. Would you say those are very expensive productions? And was the last one more pricey than the one before? It's a good question. I don't know about their unit economics on running AIP con. I don't know. These are things that are for a software company. Like, these are things that I don't think break the bank. I went to the Wejo event. A lot of you guys who are front of the channel, I got invited to Wejo's Las Vegas event. Wejo's now out of business, but they were a Palantir SPAC. I asked the CEO how much they spent. They spent like $250,000, and that was like a 2-day event. So I don't know how much Palantir spent, but I doubt it's anything that's like a real cost to the business, even if it was like $1 million or something like that. So I don't know how much the cost was, but the value they got from that conference, just in terms of the media coverage, I think was well worth the cost. All right, we got about 45 seconds until the market opens. Quick headlines, and then we'll go deeper into these upgrades. Bernstein on Amazon, they outperformed, raised to 210. Truist on Costco, downgrades to 873. Truist on Walmart raises to 89 from 76. And Raymond James on Uber raises to $90. So you got Uber up today, you got Walmart up today, you got Costco downgraded, and you got Amazon upgraded. Let's see if Amazon can break through that $200 level. It's been stuck at 190 or really 170 for a while. Amazon right here, 194 in the pre-markets. Maybe today's the day that we break through $200, and the Amazon bulls can rejoice because maybe the Bezos selling is done. All right, here we go. 9:30, Tuesday, September 24th. Thank you, everybody, for being here with me. The stock market, once again, is now open. Wake your ass up. All right, Palantir falls down 1.3%. So there's a massive sell order as soon as the stock market opens, and you get Palantir coming down. Now, we saw this happen for the past couple of weeks. Palantir has this big red candle, and then yesterday it reversed in like 2 minutes. We'll see what happens here. But it reverses, and then it plays around at the level it opened at, and then it starts pushing higher. We'll see if that happens again today. But we got Palantir right here down 1%. So at $38 or $37.95, there was a decent amount of people, 3 million worth of shares, or 3 million shares. Not all of them were sells, but a decent amount of them said, hey, we're going to sell at these levels. And that's why we got Palantir down about 1%. Let's take a look at what else is going on in the market. Then we'll get back to Palantir. Alibaba, because of the China stimulus we talked about in the morning, lowering the reserve ratio requirements for banks and making lending way cheaper for consumers and businesses, now up 6.3% on the day. This is the China ETF FXI. For anyone that wants to just track China, they are up 6% as well. Basically the same performance as Alibaba right now. Palantir right here down about 0.7%. Google up 163.84, up about 0.5%. Tesla China insurance registrations were up week over week. We'll talk about that in a little bit, but 254 on Tesla, breaking through that 250 level, which psychologically to me is a big deal. If you break through 250, I think that's a very bullish thing. And so let's see if we can continue to break above 250. Snapchat right here up 1.76%. Couple pieces of news on Snapchat. Number one, they released those AI goggles last week in some event. I'm not the biggest fan of it, but nonetheless, that's out there. Number two, they partnered with Google's Gemini to power their My AI basically version of ChatGPT that people pay $5 a month to be able to talk to. Now, why do 7 million people pay $5 a month on Snapchat to talk to this bot on Snapchat? I don't know, but Google Gemini is now powering that. So that's up 1.32% probably on that partnership. Snowflake down about 1%. So after diluting by 2 billion, down 1%. I think that's fair. I didn't expect it to be down 10, 15% because the stock's already down 40% year to date. So at this point, that convertible debt offering is probably the right thing to do when your stock is that low. Not the best for shareholders in the short term, maybe good in the long term. But, you know, Snowflake's still struggling, down about 1.2%. Off that news. Meta right here, 563. So you got Meta down about 1/3%. AMD at 157. NVIDIA up 0.5% at 166. Nike at 87. NVIDIA at 116, not 166. Nike at 87. Enovix is up about 1%. Apple's up 228. Palantir still going down, now down almost 2%, 37.28 on Palantir. Apple's at 228. KRE regional banks are up. Carnival Cruise Line is down about 1%, 1879. McDonald's is up on the day. So we got defensives going up. Is value up? Let's look at Berkshire. Value is down today as well. So we got value down. Verizon probably down if that's the case. Verizon is slightly up. All right, Verizon basically flat. AutoZone is down 4.2%. Where is United Healthcare? Interesting. So defensives are down. Verizon's up. Berkshire's down. And you got United Healthcare that's down right now as well. Is tech up? Let's go to the Mag 7. Tech is relatively flat besides Tesla. NVIDIA's up almost 1%. Amazon just went red. It was green in the pre-markets at 195. Now it's at 193. Microsoft slightly flat. Meta slightly flat. And again, when I'm saying tech is flat, tech has been up like 20% the past month. So even if they're flat, it just means some hopefully broader rotations happening. Apple at 228. Where's small caps? Small caps are green. Well, that's good to see. China injecting more liquidity is good for small caps indirectly, even if it's not literally in the United States. I'm sure a lot of these small caps have supply chains and businesses that are affected in China. So that does help small caps. And they should be going up if tech is having a little bit of a weaker day. Where's SoFi? Yeah, where's SoFi? SoFi. Why is SoFi down 1%? That is weird. Interesting. SoFi was at 798 yesterday. Now it's at 784. I don't know. I don't know why SoFi's down. S&P is up slightly. I don't know if SoFi is going down with tech, but I would imagine it doesn't do that. MP Materials are up 6%. Okay, not bad. MP Materials, you got a little bit of momentum right there. Did they have earnings today? Or is there some news there? They're up. Their market cap 2.5 billion. They're up 6%. Robinhood as well is down. Robinhood did announce another partnership with the Miami Heat. So now Robinhood is going to be the NBA logo patch on the uniforms for the Memphis Grizzlies and the Miami Heat. I didn't even know you could do two teams, but apparently they're doing two teams. So that was the news out of Robinhood. 2254 on Robinhood. Verizon 44, Amazon 193, Snowflake 111. Where is Palantir? Palantir still chilling out in that 37 range. Yeah, 37. A little bit of reversal. Bottomed at 37.17. We'll see if it can come back. But right now, it is down. Visa's dumping on a DOJ antitrust lawsuit. Okay, so this thing, thank you for bringing it up. This thing was crazy. Visa's down 4% right now. Ironically, Nancy Pelosi sold 2,000 shares of Visa a couple months ago. Maybe because she knew that the DOJ was going to sue Visa for, quote, monopolizing the debit card market. The U.S. Department of Justice is reportedly preparing to file an antitrust lawsuit against Visa, alleging the company illegally monopolized the American debit card market, according to Bloomberg. The case, expected to be filed in federal court as soon as Tuesday, stems from a broader DOJ scrutiny following Visa's failed deal with Plaid. Nancy Pelosi sold 2,000 shares of Visa in July. I mean, you can't make this up, dude. Like, this is why I said I want Nancy Pelosi to buy Palantir. This woman knows. She knows. It's just that simple. She knows. So got rid of 2,000 shares in July. By the way, the DOJ did not wake up on September 23rd and say, hey, we're going to start suing Visa. Like, no, they've been planning this for months. There is no way in hell. You can't even have the required documentations to be able to bring any type of a lawsuit in a meaningful way that gets taken seriously unless you have tons and tons of evidence. That takes years, months, if not at least years of investigation. And I would imagine that's what the DOJ did. And I think Nancy got a call by some of her friends at the DOJ. And, you know, she decided to make some moves in her portfolio. Now, we'll never be able to prove that, which is why she won't be in trouble. But this is why you just follow her, you know, sometimes. And this is why if she just buys Palantir, I think it'll be bullish. Palantir now officially down about 2% on the day, 37.15. Again, down 2%. I can't complain. Even if we fell back to 33, 34, I really can't complain. It is what it is. I'm more than happy with the performance of Palantir this year. I still think this year we end out probably at 35. That was my price target after earnings. If we have a good Q3, maybe that goes further. But people are taking profits, and that's fair. Now, we'll see if that can reverse. But as of now, people are taking profits. Visa right here down about 3.5%. Where's MasterCard in this news? Do you think Visa has a monopoly on the debit card market? Do you guys think that's the case? MasterCard down 1.3. And if that is the case, is that necessarily a horrible thing for consumers? Is that like a horrible thing for consumers? Again, that's got to be horrible for consumers to really have an antitrust argument here. And I don't know if that's the case. Arnie says Nancy will buy before a $1 billion contract for Palantir. I'm telling you guys, when Nancy buys, I don't care what the stock price is. I don't care. I will be buying Palantir. Like, it's just that simple. It is just that simple. So we'll see. Like, if Buffett buys, I that's like, okay, but there's no catalyst. If Nancy buys, I know there's a catalyst coming up. Or at least I think that's the case. What else? Where's Tesla? Is Tesla mooning on this? Tesla 255. So Tesla right here, 254. It touched 254.99. I was watching the 60 Minutes Lena Khan interview. Speaking, it has to do with this Visa stuff to an extent. And it was so interesting in the 60 Minutes interview. It's on YouTube. I would recommend people watch it. There's this woman. She goes to a meetup in New York City with AOC. And AOC and Lena Khan are sitting and they're listening to like the community members' concerns about inflation. And this one lady stands up and she gets the microphone and she says, groceries are too expensive. And she goes on this big, essentially rant on how groceries are so expensive and she needs assistance. Lena Khan's response to that lady in that moment is, Kroger's is trying to buy Albertsons and we're going to try to stop that so that we can stop inflation. Or Albertsons trying to buy Kroger. I don't know exactly who's buying who, but she's trying to stop like a merger and acquisition happening in the grocery chain space. And in my head, I'm just like, oh my God, this is what's different between the 2,000 people that are here in the chat and the average American in the United States. It is not just about the merger and acquisition. In fact, a merger and acquisition a lot of times reduces prices and makes it better for the consumer, especially when you're talking about grocery chains. It is about the fact that we printed trillions of dollars. That is why grocery prices are high. It is also about the fact that Ukraine invaded Russia and that messed up supply chains. It's also a pandemic that happened and that messed up supply chains and we printed even more money to deal with that pandemic. The idea that average Americans don't understand inflation doesn't come out of just thin air. Is there corporate greed? Of course. I'm not going to be here and say there's no corporate greed. But the idea that like a grocery chain that has 4 or 5% margins is trying to price gouge you on the eggs because they need to get 7-8% margins. It has happened in certain situations. I don't think that is the underlying problem with inflation in the United States. You don't get 10% inflation the worst in 40 years unless you print trillions and trillions of dollars. Did I say Ukraine invaded Russia? Russia invaded Ukraine. My bad. Guys, when you talk for a living, sometimes you say it the opposite way. So Russia invading Ukraine, right? And like that's the problem. When it messes up supply chains and when it messes up the broader aspects of the U.S. economy, that's where you get issues. So the point I'm saying here is the DOJ is trying to go after Visa. I don't know exactly why, but they think, Visa has this monopoly. They're trying to go after grocery stores because they believe they're price gouging. When in reality, a lot of this has to do with government spending. And I don't have the perfect solution to this. It's very difficult to come up with these solutions. But government spending is a big issue. And if we reduce that, that will hopefully help in the inflation debate. S&P right here, 569, Coinbase 171, Snapchat 1027, Shopify at $80, Nvidia 117, Nvidia up 1% of the day, Nvidia getting a little bit of love. Apple continuing to get momentum at 228. Dan Ives came on CNBC yesterday. He said Apple's going to 4 trillion. Maybe they are, maybe they not. We'll see what happens. But Apple right here at 228, it's continuing to get a little bit more momentum. Doug says there's no such thing as corporate greed. There's just people who want to get paid for taking risks. Yeah, I mean, look, that's fair. And I do think that, like, Target, for example, did not lower their prices for 5,000 items because they thought consumers would still be willing to pay 2021 inflation level, COVID level prices. And they got humbled on their earnings because no one was willing to do that. Their earnings slacked heavily, and then the stock fell 15%. Guess what Target did? They reduced their prices, right? This was not like a corporate Target is some horrible, evil company. This is like, hey, they raised prices because of inflation. It took them some time to cut them, and now they've cut them. But the idea that we need to stop Target from buying any small company because it's going to make it so anti-competitive, I just think that's like not the best mindset. And Lena Khan, that answer to that woman in that public setting, it was very, I mean, it was shocking to me. She was just like, yeah, it's a corporate greed. She didn't even mention that we printed trillions of dollars. And like the average American needs to know that $1,200 they got in stimulus, that $600 they got from Trump, that $2,400 they got together, that's because we printed it. It did not come out of thin air. It had to come from somewhere, and it came from printing and that increased M2 supply. I don't even think most Americans know what M2 supply is. And that's the issue. That is the broader issue we're having when it comes to these financial literacy debates. ELF right here at 114, Ulta at 402, SLG down a little bit on today. Where's Palantir? Are we still below 37, 37.10? All right, so it looks like we could fall below 37. Let me pull up the order book flow on Palantir. Covered calls today are printing on Palantir. This is the first day in a while covered calls are printing. 37. Resistance to 38 is about 20,000 shares. 20,000, nothing too crazy. So there's not too many crazy walls. It is a very tight bid-ask spread. There you go, right below 37. There you go. All right, so you got the sellers coming in. You got the sellers coming in right now. You got the sellers coming in. Where's Tesla? Is Tesla up? Tesla up? Wow, 256 on Tesla. Holy crap. Okay, so let me bring up that Tesla China news that was big today. So this came out this morning. Tesla's just been having a lot of good catalysts back to back to back. And then you've got 1010, which is going to be the biggest catalyst. So in Tesla, or in China for 2024 September, they have insured, let me just do the math real quick. Let me add this up. You got 14.4 plus 14.4 plus 16.2 plus 15.6 plus 14.3. You've got 60,000 vehicles insured in China in the month of September, which, if I'm not wrong, that is a little bit above August, but same on par with August. But August was way above July, which is a good thing. So you're starting to get a lot more momentum. Wow, Tesla's positive now year to date. Look at that. Tesla positive year to date. It's been a hell of a journey for Tesla investors. Wow, it's up 3% year to date. Tesla is officially positive. Look at that. I mean, it fell to 130 April 22nd after that Reuters article and the Elon compensation, and then they got the compensation done, and then we spiked up to 270, and then it came all the way back down. Now back here at 256. Year to date, 3%. From the bottoms, it's up about 80%. Over the past year, up 3%. Over the past 5 years is where you have your 10x. This is what people look at when they zoom out on Tesla. Unfortunately, if you bought any time after 2021, it's been a little tough to navigate it. Now, if you are selling puts and calls on Tesla, the premiums are incredible. The premiums are incredible. So if you're wheeling and you're okay with being assigned a Tesla at whatever price because you're really long-term on Tesla, the premiums are absolutely fantastic. But sometimes the covered calls can run away from you because this thing just starts running. And the puts can really hurt when this thing collapses to 130. Palantir reversal on 36.98 back to 37.16. So a ton of buyers just stepped in at 36.98. This is what makes me feel it's going to be really hard to get a super big dip on Palantir, because if buyers are willing to step in down 2% and buy up shares, I mean, what happens when this thing goes to 34, 35 if it gets there? Like, unless something changes in the thesis or there's like a macro issue for the whole economy, the buyers are going to step in at many levels. And so it's nice to see that happening today. It shows that 37 was resilient and hopefully can consolidate at those levels as well. Celsius is down on the day. Yes, Celsius is down. Let's check PayPal. Celsius right here down about 2%. PayPal up a little bit. PayPal back into the green at $78. Let's see. What else? When will SoFi stop being such a disappointment? You know, I'm so confused what's going on with SoFi. Really, I'm confused why it's down 1%. There was no news that came out on SoFi. There's no analyst downgrade. 50 bips is bullish. I think this might just be shorts like continuing to manipulate. And I hate saying manipulation of a stock, but like with SoFi, it really is shorted heavily, dude. That's the only logical argument I can provide here. Short float is still 18%. That hasn't changed. 190 million shares. I don't know. I really don't know. I didn't sell my SoFi options. No, I still have them. I'm waiting for $9. And $9, it's a difference of about $2,000 I would make. And I think it can get to $9 by the end of the year with another 50 bips. I don't think that's asking for much. I feel like the risk reward on that play is good to just be patient, especially because I'm in the money on those options. But I don't know. This might just be short-term noise, but I really don't know, dude. 50 bips is bullish. Interest rate cuts are bullish. China cutting is bullish for SoFi. Indirectly, it just means more capital is flowing around. Are all banks down today? Is XLF down? Yeah, banks are down by 0.5%. Maybe it's a banking thing today. Regionals are up a little bit. Maybe SoFi is just tanking with the rest of it. I know fintech's down a little bit, so maybe SoFi is just going down with some of the fintechs. Where's the banks? Then we'll look at semis. Banks are, oh no, look at this, dude. Look at the left-hand side of my screen. The only bank that's red is SoFi. Holy crap, dude. Holy crap. The only bank that's red is SoFi. Barclays, Nubank, PNC, JPM, USB, TFC, Zion, KRE. Wells Fargo just slightly went red, and then Bank of America is green. That is weird. You would expect other banks to be suffering there if SoFi is red. I don't know. Maybe SoFi needs another 50 bips, and that'll help it out. Where are these semis? So semis are, wow, look at that. All green. NVIDIA, AMD, SMCI, Intel, ASML, Broadcom, TSM, Qualcomm, all of them are green across the board. Micron holding on to its gains from yesterday. Interesting. Wow. That's nice to see the semis all go green together. Market might get a little excited today, maybe rotate out of some of the other names that they sold them off for as we get into Q3 earnings for the semis. Another 50 of bips. We need another 50 bips of cuts. We need another 50 bips of cuts to I think, help SoFi. Arnie says it's down when tech goes down. It's down when banks go down. Yeah, dude, I don't know, dude. I don't freaking know. This thing is, it's one of those things. Every time I think, man, maybe SoFi breaks out to 15 next year, and like, you know, it's stupid to not buy it at 8. It's just, but again, I also think we're prisoners of price action, but I don't blame people being prisoners of price action because it's been price action for 3 years. That's been the same. So it's one of those things where, you know, yeah, is it a little short-sighted? Just look at the price action. Yes. But also the fundamental thesis, I think the market is just not that excited for, at least not now. But with more bips, I think you have more lending. I think that helps SoFi. 37.08 on Palantir, Robinhood at 22.62, IWM at 221. That's up on the day. Berkshire is down a little bit. Amazon at 192. Alibaba right here. Alibaba still holding on to 6%. If you're just joining the stream, China opened the money printer last night aggressively. They lowered reserve ratio requirements for banks. They lowered the medium-term lending facility, so banks have a cheaper rate to borrow from the central bank. And then they lowered the mortgage down payments for second homes. So you got the Hang Seng China index that's had its longest rally in 6 years. CSI is up 4%. Alibaba's up 5%. FXI is up 6%. China has absolutely turned on the money printer as of last night. We have consumer confidence at 10 a.m. Okay, cool. So in about 10 minutes, we'll look at consumer confidence. We'll see if that affects the market. Here's speaking of Bitcoin, because we're talking about liquidity. Here's a chart on Bitcoin. So Bitcoin is coming up to its 170th day after the halving event. Historically, after that 170th day, Bitcoin runs. Will that happen again? I have no clue. But if you look at what happened in 2017, you have that halving, you wait 170 days, and then boom, it takes off. We are on the 157th day. Today is the 154th. So we are about 16 days away from this magical halving event that turns into this crazy bull run. Maybe we're close, and maybe it takes off, and maybe that helps. I think it is before an election, which is going to be really interesting. I don't think, have we ever had a halving event go into I think 2020, right? We had a halving event going into the election. So it has happened before. We'll see how the market interprets it. PayPal right here, 78, Tesla 255. But if that helps, then, or if that historically holds up, then maybe that's bullish for the broader Bitcoin ecosystem. You got all the Bitcoin stocks that are green today. CleanSpark's up a little bit. Coinbase is up a little bit. Marathon's up. Riot's up. Cypher's up. MicroStrategy up 1.23%. MicroStrategy getting a ton of momentum. This thing was at $110 like 4 weeks ago. Now at 150. Robinhood down just a little bit. We got Bitcoin, BitX, 2x Bitcoin ETF. That's up. The miners ETF is up. So the miners getting some love after getting pretty much crushed over the past couple weeks. And Bitcoin trying to approach that 64,000 level right here as well. What else do we have? SoFi is a threat to the major banks. They are a lot of big players in that space who are working to squash a SoFi breakout. You know, this is the part that I don't really understand. I don't think JP Morgan is that worried about SoFi, dude. Like, I know a lot of the SoFi bulls are like, well, they're a threat to the big. I can, as a Robinhood bull, I can admit Schwab might be a little worried, but they're not shivering at night because of Robinhood. Schwab has 9.4 trillion in assets. Schwab added 32 billion in deposits last month. Robinhood added 3. Like, I'm not saying Schwab isn't thinking of Robinhood on their radar, but it's just like, it's like they're not at that level. So the idea that Bank of America is seriously worried about SoFi, I don't know, dude. I really don't, especially because, you know, like, you haven't used the SoFi app and the Bank of America app. There's not that big of a difference, quite frankly. It's really not. The technology is not that different. I don't know. I don't know if the big banks are worried that much about SoFi. Granted, I think SoFi is theoretically undervalued against like Bank of America, given Bank of America's had a great year. SoFi has been kind of stuck this year, but I don't know long-term if they're that scared of what SoFi is going to be able to do. Sachin says the day SoFi is a threat to big banks, they will just acquire it or will place an order to buy a banking business up. SoFi, big banks are big for a reason. Yeah, I agree as well, which would give a nice premium on the shares, but I don't know if that necessarily means they're that scared of them right now. Amit, are you in any dividend stocks? I am not in any dividend stocks. However, I agree with your second sentence that moving into yield chasing assets from high yield accounts, because those high yields accounts are not going to be as high yielding anymore as the Fed cuts rates, is not a bad idea. It's not a bad idea at all. You just want to make sure you're in the right yielding assets. Like, if you pick a stock that's yielding you 7%, but the stock goes down by 20%, the yield on the dividend is not that exciting given the capital appreciation goes down the drain. So you have to pick good companies that are going to be around for a long time. Chris has come on this channel many times. He likes Verizon. Verizon right here is 6% dividend. Everyone's most likely going to use their cell phones, whether we have a recession or not. The stock will probably be affected if we have a recession, but you know, it won't be, you could argue it won't necessarily go down the drain because they will still have cash flows. Another dividend stock I really love is Truist. Truist right here, dividend yield of 5%. It is the 7th largest bank in the United States of America. I like the company. I like the CEO. I also think they navigated the Silicon Valley banking crisis very well. They sold off the student loan business. Like, they just executed really well. The stock went to $27 on May 23rd. Like, it was an absolute, it was in a dumpster, but you know, they executed, and they only went down because the market was scared, not necessarily because they deserved to go down to 10-year lows. So I think if you pick a dividend stock and you lock in a yield, you just have to pick the right one to be able to make sure that yield is not destroyed by capital deappreciation. Looking at this 37 level on Palantir comes in the next 10 minutes to determine which option I'm buying for this week. I'm assuming you're thinking of either a covered call or potentially a weekly call you're buying. Where's Palantir right now? Palantir at 37.09. All right, so Palantir is still trying to hold on to that 37 level. The 10-year is up today, which is not the best thing in the world for the 10-year to be up after the Fed cut rates. So that's something that we also do have to keep in mind. I am curious. I mean, the bond market is not exactly acting the way the Fed wanted it to act, having cut rates. And so that is saying something. The 10-year, 2-year spread as well is continuing to be uninverted by, what is it now, by 20 bips. Now, what's really interesting about this, and I actually saw this stat yesterday from Meet Kevin. So this is a stat that he brought up. But every time we have a recession, it's when the 2-year, 10-year spread is deeply uninverted by close to 70 bips to a full percentage point. If you look at historical recessions, they've happened deep into the uninversion, not at the beginning of the uninversion. And as Chris says in the chat, he's absolutely correct on this. It means mortgage rates will start to rise again. Mortgage rates did go down nicely when the Fed cut rates. Let's check where the real mortgage rates are right now. But the potential for them to go back up because this 10-year is not coming down is very possible. Now, having said that, every time we look at a historical indicator like the 2-year, 10-year spread having to go to 70 bips or a full percentage point before the recession happens, I think it's important to remember 2 caveats. Number one, historical indicators for the past 2 years have not been currently accurate for the economy that we're living in right now. And you could say that, all right, it's just waiting to be accurate and then boom, everything's going to collapse. Maybe that's possible. But for the past couple of years, historical indicators have not been the best for predicting recession in 2023 and 2024. Second thing is I still think it's about earnings growth and unemployment. Like the 2-year, 10-year could be, every time the 2-year, 10-year was massively uninverted and it went uninverted up to about a percentage point, which is when the recession happened, you had unemployment spike up to 5.5%. So I think you need unemployment to also carry out the thesis for the recession. You can't just look at the 2-year, 10-year uninversion and be like, oh, well, when it gets to this level, we're going to have this recession. We need to see unemployment spike up. And so far, we haven't seen it aggressively spike up. It actually went down from 4.3 to 4.2. Now, that has to deal with the denominator increasing because you have a lot more immigration. But still, we added 142,000 jobs. You could believe that. You cannot believe that. I'm just reporting what the BLS reported. And if we add another 140,000 over the next couple months, I think we at least avoid a recession in 2024. If unemployment spikes up to 5.5%, in 2025, then we're going to have some issues, or even spikes up to 5% because we've never avoided a recession with 5% unemployment. And that makes sense. That's not even a historical indicator. That just makes sense because people don't have money. They can't spend. If they can't spend, companies don't have earnings growth. If they don't have earnings growth, stocks are going to go down. Now, I think the Fed cutting by 50 bips is them acknowledging, hey, we think there's a chance unemployment could go up, even though they said they don't think there's that big of a chance. Therefore, we're going to try to stop it before that happens, which is what everyone has been wanting them to do. The question is going to be, are they successful at doing that? And if they are successful at doing that, then, they have the soft landing. You had a bunch of people, a bunch of economists that came out yesterday and they said the Fed nailed the soft landing already, that we're already in the soft landing. Maybe that's the case. Maybe that's not. But I think we're still going to have to see until that plays out. If CRM is up right now, the reason CRM is up is because they got upgraded to $325. CRM is up 2% right now. Yeah, I'll go through that upgrade in a second, but they got upgraded today. I'm assuming Benioff has people sipping the agent force narrative. Okay, so here's an article that Chris just sent me on mortgage rates. Current mortgage rates as of September 24th, 2024, rates increased slightly, topping 6.1%. And again, this is likely because of that 10-year going a bit higher. The current average interest rates for a fixed year, 30-year mortgage confirmed loan in the United States is 6.10%. So that's what you have right there. The last reported rate was 6.06. So it's a slight increase, but it is an increase. And that's likely because of that 10-year going a bit higher. As you can see from August 28th, August 26th, we were at 6.3 on the 30-year. Yeah, 6.3. And so now it's here at 6.1. Again, up a little. There's that tick right there from when the Fed cut to where we are right now. And so the 10-year situation, dude, I mean, we're going to have to see how that plays out. That 10-year is a bit concerning, and it's not doing what the Fed wanted to. You had people like Dan Niles basically say that it was not that big of a deal when they came on last week discussing that it was a short-term reaction to the rate cuts. But I think the market will definitely want to see those bond yields or the 10-year and 2-year start to come down a bit more aggressively than what they've currently been at. Could this mean 50 bips rate cuts for November, December? I think that's happening no matter what. I think regardless of the 10-year, 2-year, I think regardless of mortgage rates and regardless of any idiosyncratic things, regardless of the election, the Fed is concerned about unemployment. We had Goolsbee and Kashkari come on yesterday, and they publicly said that we think we're still too tight. Both of them said we still think we're too tight after 50 bips of cuts. I mean, come on, bro. If you think we're too tight after 50 bips, we're getting another 50. The question is going to be, will the 10-year react in the way that the market wants to react? And so far, that's not been happening. And again, it's probably not happening because we printed a lot of money. We raised interest rates really quickly. Like a lot of things that are supposed to be happening aren't happening. And the market's just going to have to reconcile and deal with all those things. Palantir right here, officially down about 3%, 36.89. So failing to capture that $37 level and starting to go a little bit lower now as well. Chris says housing might put us into a recession. Inventory is going up, prices going down, buyers are squeezed, and staying away. The only way we solve this is if buyers come in and if inventory goes up to such an extent that we actually make it so enticing for buyers to come in. But again, if those mortgage rates don't decrease, it doesn't matter if we have a ton of inventory. And that's the problem with that 10-year not budging. That's basically Chris's point right here, is that if mortgage rates don't come down, you could have a ton of supply and you could lower a ton of prices with more competition, more supply in the housing market. But if people can't finance the house, they're not going to buy it, right? And so that's where you get into another pretty weird situation in the housing market. And so I guess we'll have to see how that one plays out, but maybe another 50 bips ends up doing what the Fed wants it to do. 255 right here on Tesla, a little bit of a red candle right here. We did hit 257. Now we're up 2%. Robin at 2238. All right, so we're starting to see a lot of assets that went up over the past couple of weeks start to take a little bit of a tumble. S&P at 568. I don't think there's any news. Oh, we just had consumer confidence. Let's check that out. Was the consumer confidence good or bad? Was consumer confidence good or bad? Let's see. Consumer confidence came in lower than expected. That's probably what the market's reacting to right now. So consumer confidence consensus was 103. Last time was 105. We came in at 98.7. Not a dramatic decrease, but it is a decrease. So what is consumer confidence? At the end of the day, it's how confident are consumers via surveys and polls, et cetera, on spending. And retail sales data was good in August. It was good in July. It was good in June. Will it be good in September if you have consumer confidence coming down? I still think yes. I don't think it's going to be dramatically lower because consumer confidence is not that low from what was expected, even though it is a miss. But if it's not, then you have a narrative shaping up that maybe unemployment's going a bit higher, even if it's not literally reported that it's going higher. You got consumer confidence going lower. And then you have consumer spending via retail sales going lower as well. This is why I have not ruled out the recession thesis, dude. I have not ruled it out. I am not in favor of it. I don't think it will happen. I could be wrong, but I still think there is an argument because I think this economy is it's so fragile right now. And if NVIDIA, for example, if NVIDIA misses earnings, like there you go, we're done, right? Like there's so many things that are holding on this economy by a thread, and you need kind of all those things to work out in order for the 2024 bull run to actually be a 2024 bull run towards the end of the year. So, I mean, we got to see, how it plays out, but there still are arguments for a recession that could pop up. And a lot of you are telling me in the chat as well that you feel the pressures of a just like the pressures of spending, right? And buying and like taking out loans and living paycheck to paycheck. Like a lot of people are still dealing with those issues, including myself. Everyone is, I think everyone's a little tight at the moment. The reason I think some of us in the chat are a little bit different than other people is because we've invested in assets that have appreciated. And so, if it comes to, the reason I was able to buy this iPad is because my assets have done well. And, an iPad is a luxury purchase, but I feel, I can take the hit on $1,000 on an iPad because I'm doing okay. As soon as you stop doing okay in your assets, then you start thinking, man, I can't buy this iPad. And that's where a recession becomes a self-fulfilling prophecy. As the stock market goes down, your assets decrease, your house prices go down. You start feeling, hey, I don't have that much equity. My net worth went down substantially. Do I really need to buy this iPad? And then you don't buy the iPad, and then Apple has bad earnings. And so, although some of us have been doing better than the average consumer just because of investing, that doesn't mean that people still aren't feeling the pain of just an economy that's a little bit tougher to buy in. Palantir right here down an official 3%, 3680. So there you go. We got a nice little dip today. I think 5% is a real healthy dip, but 3% on the day. We'll see if this reverses. But Palantir down about at 36.78 right now. The website I was using, by the way, for that is TradingView. Or sorry, not TradingView, Trading Economics. That's how I got the consumer confidence data. Okay, so let me pull up this other thing from Trading Economics that we're looking at, going back to the housing discussion. Now, one thing I will say on this consumer stuff is, remember, companies have been showing the consumer is still strong. And either you believe Uber, McDonald's, Lyft when they say the consumer is strong, or you believe Dollar Tree that says the consumer is very not strong. But although, consumers may be personally feeling a lot more stress in terms of finances, they're still spending. And Q3 earnings is really going to show us how much they're spending. Because if Q3 earnings start missing across the board, then you can, I think, more clearly say, hey, the consumer's having some issues with spending. So this is the United States Case-Shiller Home Index year over year. The S&P CoreLogic Case-Shiller 20-City Home Index price in the U.S. rose by 5.9% from the previous year in July of 2024, slowing from the 6.5% increase during the previous month and loosely in line with market expectations of 5.8%. So house prices are going up. They are not going up as much as they were going up a month before, but they still are going up at the end of the day. And with more inventory, housing prices still being up, it doesn't matter unless mortgage rates come down, which is what I think the Fed really wants to see. But at least housing inflation is starting, to come down year over year. They are spending because we are a consumer generation. It's not good. Doesn't mean strength. It means irresponsibility. And look, I think that's a very fair point. I think a lot of the people, whenever I say, hey, the consumer spending, the pushback I get is that, yeah, but they're taking on debt and they don't have any savings. And that's why they're spending. I agree. Although it's good to buy the iPad for Apple, if you have to go into credit card debt and then have a resolving balance on that credit card debt to pay for the iPad, that's not good. And if that's where the majority of this consumer spend is coming from, yeah, that's not a good thing. I agree. And, will the chickens come home to roost for that? We'll see. But I think it's going to take some time to play out, and eventually we'll figure out if that happens. My overall thoughts again are I don't think a recession is coming soon, simply because I think the data is still skewed to the upside in regards to the consumer, unemployment, inflation, and good earnings growth. If those things change, then we'll have to see. But so far, I don't think the stock market is necessarily acting like that, and I don't think unemployment results are showing that same type of data. Tesla at 253 right now. Look, if we have a recession, Tesla won't be at 253, and I'm pretty sure Palantir will not be at $37. So if we have a recession, these stock prices are dramatically overvalued in comparison to the growth that the United States is going to put up, or the lack of growth if we get into a recession, because we'll probably have negative GDP growth. I don't see us having negative GDP growth over the next 6 to 12 months. I just don't see that. And so, if that's not the case, then I think we have a chance to at least avoid a bit of the problem that a lot of people complain about when it comes to a recession. But the 10-year is a little concerning. That 10-year not reacting the way that we want it to react, it is a bit weird. Oh, wow. We got Jamie Dimon on CNBC. Let's get his thoughts. So here we go. We got Jamie Dimon today. Speaking of recession, if you want someone who's who's going to be a little bearish, let's get our boy Jamie Dimon on. Let's see what he has to say. In about 10:30, guys, Chris Camillo is going to join me. So in about 23 minutes, and we're going to be talking about Palantir. It'll be a fun podcast, and I think he'll have a lot of insight to share. But he'll be on in about 20 minutes. Here we go.
18, our counterpart in India, and did talk about this whole market setup and why he's been a little bit more skeptical. Listen.
I think the stock markets and the bond markets are pricing in a soft landing. But you also look at the stock markets are generally very high, and bond spreads are very low, and that's kind of Goldilocks, and that may very well happen. I'm hoping for that. I just give it a lower odds than the market does.
He continues to give it lower odds.
And by the way, I think he's on television or saying it somewhere every day. He's very determined to let everybody know how he's thinking.
Right, which is. He's more cautious.
He is more cautious
in recent weeks.
He has been more cautious for some period of time, as we know.
Maybe it's a little bit of a JP Morgan as the port in the storm kind of framing, because that's been the case, if you want to look at it in a self-interested way. But just this idea of this driving the market and what's priced in. A UBS note stood out to me today. They say the first step for investors is to be confident that the Fed cuts ensure that the soft landing evolves into an indefinite expansion, which we do think will happen by year end and possibly as soon as September payrolls data are released in October. That should be positive for risk assets, but markets are already priced for a soft landing and volatility could spike again until this shift takes place. In other words, Fed really has to land the plane and with these cuts.
Indefinite expansion sounds exciting.
Expansion, I guess.
It's kind of like the universe. It's definitely expanding.
It would be.
Basically, they mean the money printer has to start printing and we should start expanding liquidity. That's what they're talking about. China did that yesterday. And now for the soft landing folks, they're saying, hey, JPowell's got to do it again by giving us more rate cuts.
Positive. I guess that's what a soft landing is, right? It just
goes on and on.
It doesn't land.
Yeah, it never lands.
Let's get to the road ahead for markets here, given this backdrop. Joining us here, post 9, Evercore ISI Head of Portfolio Strategy, Julian Emmanuel, has the second.
Oh, I like this guy. The reason I like this guy, he was bearish for like a year, but he ended up turning bullish 6 months ago. And he turned bullish at the right time. So he was really bearish and he turned bullish. I always like getting perspectives from people that are so dogmatic and then they switch their minds. Let's get his thoughts on where he thinks this current market is.
Highest S&P target on the street at 6,000. Alongside S&P Global's U.S. chief economist, Satyam Pandey, fresh off of the release of their new Q4 economic outlook, calling for slowing GDP growth and more Fed rate cuts. Gentlemen, it's good to see you both. An indefinite expansion, is that possible?
I will believe it when I see it. But at least we know that the baseline case for the next 12 months is one of a soft landing, most likely scenario. It seems like the Fed is on its way to stick that landing with the neutral rates coming down to where they think it's between 2.5 and 3.5. And it looks like we are getting to the trend growth rate more than anything else at the moment.
So what does that mean? Because we're tracking almost 3% growth for this quarter.
Yeah, we are tracking almost 3% growth for the second quarter and the third quarter. I think there are some red flags in the consumer caution that's creeping up, like the confidence index that we saw this morning, and some of the fiscal direct contribution to growth coming from the state and local governments. Those should be sort of reversing to more historical averages. So those positive surprises are sort of behind us now, and it'll be more in line with your personal income growth. And that's why we have revised down our growth profile, but still, it is a 2% growth profile. So nothing, that suggests it's a recession in the horizon.
In China, they're obviously more concerned, perhaps, about lack of growth. Julian, I'm curious to get your reaction, obviously, and what the impact is, if there is any here, in terms of at least those moves that they've made thus far.
Well, so it was a good.
This is the guy who went from bearish to bullish
start, but as you alluded to earlier, the housing situation, the overhang, you can do only so much with monetary policy, but to the extent that it incrementally improves the psychology, that's good. And for U.S. assets, it's a mixed picture, but on balance good, because essentially what it does is it sort of cushions the idea that China was going to drag us into a global growth slowdown type abyss. On the one hand, of course, on the other hand, there's this idea that with China stimulating, yields are going to go up. And it's no surprise at all that yields have been grinding higher consistently since the Fed cut rates, because you backstop growth. You basically put a floor under, how much inflation can go down now with China doing what it's doing. But on balance, it really is a positive medium term for risk assets.
Is that why your target is higher than other people's on the street? Bob joined us last hour showing everybody's behind the curve on their S&P price targets, but we haven't reached yours yet.
No, we still have some a ways to go, and look, it's one of those really challenging years. I want to go back to both Jamie Dimon's comments and the consumer confidence numbers. Essentially, when you take them both together, they keep the wall of worry built. We would be more concerned if we started hearing everything's great, everything's roses.
It is consensus, though, that we're not going to have a recession, isn't it?
It is definitely consensus, and
doesn't that worry you?
It does, but again, first of all, we're approaching into very favorable seasonality, as we all know. October tends to be market bottoms. The other thing worth knowing is that actually every single time, without exception, that the S&P...
I'm sorry, Julian, I have to cut you off because we have the President Biden at the UN General Assembly. Let's go there.
My fellow leaders.
Okay, I don't want to listen to Biden. I don't know if you guys want to listen to Biden. Dude, I respect President Biden. I really wanted Julian Emmanuel's thoughts about the stock market a lot more than I care about Biden speaking right now. Like, I really wanted to know more. They were just getting into the juicy stuff about a recession. Oh my God, that's what I care about. Why? Dude, why? Like, it's a business channel. Like, what is he even talking? He's at the UN. Is it that important? What is he talking about? He's talking in front of the UN. About what? What is more important than talking about a soft landing or not? Like, that matters a lot more. Oh boy. All right. So, well, one of the things that Julian did say right there is that consensus opinions consensus thought on the street is recession. That's not good, right? That's not good, because usually what happens against consensus is what tends to just like happen in the stock market. Usually it goes against what the overall groupthink is. Now, his hedge against the idea, Tesla right here at 253, that the consensus opinion is recession, is that October tends to be a market bottom. So you have really good seasonality loading up for the broader market as we head into Q4. And earnings growth, I imagine if he didn't get cut off, he would talk about earnings growth still is so strong that S&P is trading at 24 times earnings. You take out the Max 7, it's at 18 times earnings. If the other 493 companies have good growth or even like decent growth in Q3 and guide for good Q4s, you should see expansion even if the Max 7 have subpar growth or like barely grow, which they're not. I mean, Meta's going to grow well, Google's going to grow well, Apple's probably not going to grow that much, Tesla's not going to grow that much, but NVIDIA is going to grow well. So you're going to get expansion out of the Max 7. It's just those other 493, and now that rates are down by 50 bips, that should help them even more continue to grow. So, yeah, I think that will be important. Again, Julian Emmanuel, I respect his thoughts a lot because he had the guts to go from bearish to bullish in a world in which in this business, like usually when you make a call, you stick with the call and your entire kind of reputation not only rests on the call, but your job, right? If you're at Morgan Stanley, like Mike Wilson, and you told your clients at the end of 2022 to sell everything, get ready for this massive crash. And then 2023 turns into one of the biggest bull markets we've seen in a while going into 2024. It's really hard to look your clients in the face and say you're wrong. It's easier to say, no, it's a joke. It'll be a recession soon. Don't worry. We were a little early, but it's okay. So to actually switch and make the pivot, I respect it a lot. But then you got to defend that pivot. And so, we'll see if that pivot ends up making a lot of sense for Evercore and for the other firms that made that pivot as well. No, but what is Biden actually talking about, dude? Is he also, this is a long speech. Are they just going to play this for the next 40 minutes? Like, he's still talking right now. This seems like there's going to be a long speech. So I imagine it's going to play for the next 15, 20 minutes. And I guess he'll just keep talking. Where's the market downturn from right now? Honestly, dude, we've had a really good couple weeks in September, which is surprising because it's September. Let me pull up the Salesforce upgrade that we got today. Chris Camillo should be on in about 15 minutes, and he'll be on. We'll have a fun discussion on Palantir. But I think people are just taking profits today. I don't think there's any crazy macro catalyst. I mean, China was super bullish this morning. Is BABA still green? BABA is still green, up 5%. China, as they said as well, China going bullish is really good for the global economy because you just have more global liquidity. If China doesn't slack off, then that's going to help overall global GDP growth. So that's not a horrible thing, but market's up a lot, dude. People are taking some profits. So Piper Sandler, they raised Salesforce, and here's what Piper Sandler said. Piper Sandler said, we are upgrading CRM to overweight based on favorable risk reward, given the potential for free cash flow per share to double to $20 by fiscal year 2029 from $9.65, even if the top line growth remains at subdued levels of 8 to 9%. Wow. So they're saying free cash flow will grow regardless of top line growth, which is just music to ears. I would imagine is music to everyone's ears if you're a Salesforce investor, because you probably don't think they can get to 12, 13% growth. That's just asking for a lot, but they can increase free cash flow. And that's how you could justify a higher multiple. Relative to large cap software peers, CRM has the lowest valuation multiple on an EV to sales, EV to free cash flow, and PE basis. What is the Salesforce PE? Is 27. What about Datadog? Datadog is 73. Oh yeah, they're right. What about Intuit? Intuit is 37. What about what's another software name? Oracle. Oracle's PE is basically the same, 27. Interesting. Yeah, I mean, that's fair. I guess free cash flow is enough to get. So the only way this free cash flow thing happens, though, is if Agentforce becomes what people think it's going to become. The new price target for Piper Sandler is 325. 325. SoFi's down 3% on the day. So SoFi, I mean, look, all of fintech is taking a little bit of a dump today. PayPal right here. PayPal's green. Robinhood is red today. So Robinhood's down about 1%. Square is down 1%. So it makes sense that SoFi is down. Now SoFi's down a bit more, down about 3.2%. Not sure why, but it is in line with other fintechs. Are banks finally red? We got the 1030 slam coming up in a little bit. Banks are currently Still mainly green. I mean, some banks went red, but you still got other banks going green. Bank of America did go red. JP Morgan's up a little bit. Yeah, SoFi's getting hit worse than most of the banks, and I don't know why. I really am not sure why. Where's Palantir? How's Palantir doing? Palantir is Disney, by the way, down at 92.54. Palantir right here is at 36.83. Still down 3% as well. Do you use regular PE instead of forward PE? I use forward PE more often than not. But I don't think regular PE is horrible. It's just the market's always looking forward, into what's going to happen into the future. So like Google, I mean, on a forward basis, if you believe Google is going to be able to grow the way they're growing, you're only paying 21 times for that growth. It's not the worst thing in the world. But I think using current PE is not horrible. NVIDIA tends to get valued a lot more on forward PE. And the funny thing, this is what so in my video yesterday on Daily Palantir, I talked about Bank of America's valuation on how they got to $50. Arnie and Amir, I have that video linked in the description, did a really in-depth quantitative analysis. I just talked about it briefly. But Mariana just like went to next year's earnings, I think 2026, so 2 years from now, and she just gave it a higher multiple. So a lot of times you can justify stock prices today by saying, hey, in 2025, NVIDIA is going to grow $5 of EPS. If you give them a 40 multiple, boom, 5 times 40. Look at that. We got a $200 stock. It's worth $115. It's undervalued. However, that's not always the best way to look at it, because what if NVIDIA doesn't grow at $5 of EPS in 2025, and then you don't attach a 40 multiple to that because they grow at $3, and then a 40 multiple on that is 120. Well, 120 to 116, there's not really that much alpha there. And so a lot of times it's a little tricky looking at the forward. But if you believe NVIDIA is good for it, if you believe Google is good for it, if you believe Palantir, which is a lot more riskier than those two companies, is good for that growth, then it should maintain momentum. Right now, Palantir's price, I was looking at some DCFs, are implying a 35% compounded growth rate for the next 10 years and 35% free cash flow margins. So that's what $37 is implying. Now, again, that's more based on like actual looking at the numbers. I think a lot of people are buying the stock not just based on the numbers, but if they live up to those numbers, you could argue Palantir is not overvalued because the growth is going to justify it. But that's what we got there. Let's see some other headlines we have right now. Boeing expects a 2 to 3 week production disruption post-strike. They offered 30% increase on wages. I don't know if that officially got approved, but they did offer that to the union yesterday. Piper Sandler raised Celsius to 47. Interesting. They said, we are updating our model to account for incremental headwinds from promotional discounting that still applies to sales at retails that don't have to deal with the Pepsi inventories. We are also tempering our outlook for future quarters as U.S. measured retail trends slow. Okay, so I guess they're giving Celsius a little bit more momentum there. The Amazon price target. So I talked about $210 by Bernstein. Here's what they said. Amazon's announcement that ads would be coming to Prime Video last year was accompanied by rosy revenue and profit forecasts. However, halfway through the year, Amazon's ads revenue have disappointed, raising questions about the ad-driven sales. Amazon right here at 190, down about 2%. Amazon's announcements to launch ads on Prime Video was expected given the build out of video advertising across Twitch. By making it opt out, everyone gets ads or pays an extra $2.99 a month. It offered advertisers a chance to reach over 200 million viewers overnight. The bull case for advertising is Amazon has been a trendy top pick for most of 2024 with AWS reacceleration and retail margin expansion driving free cash flow growth. That makes a lot of sense. We believe ads could again be key to the bull case as Prime Video ad revenue skewed towards the second half of the year, especially fourth quarter, as dollar commitments from the upfronts, the NFL, etc., will increase higher subscription revenues. We expect $1 to $1.5 billion in incremental free cash flow based on ad sales. Interesting. So they're giving it a $20 price target upgrade based on the fact that the first half of 2024 has been bad for Amazon advertising. SoFi right here, 765, Palantir 3683. But the second half of the year, they think is going to be really bullish. And that's where the ads should make a lot of sense. Okay, cool. All right, folks, I have someone backstage that I'm about to bring on to the show. This is a guest that I've been waiting to have on the show for a while, and he's a really special person. I want to give him a little bit of an intro because we're going to be talking about AI today. I thought none other than let me ask ChatGPT to give me a biography of Mr. Chris Camillo. And here he's so famous that ChatGPT was able to go through the internet, scrap everything, and it gave me this background. So let's see what ChatGPT has to say. Chris Camillo is a well-known stock trader, investor, and entrepreneur recognized for his unconventional approach to trading and investing. His investment strategy focuses heavily on social data and cultural trends rather than traditional financial metrics. I think Chris tweeted the other day that he hasn't looked at a balance sheet for the past 20 years, or at least since college, which is just incredible. Social arbitrage is what Chris got famous for. It's what he calls social arbitrage, which is a untraditional form of investing that relies on fundamental analysis. He identifies opportunities by spotting trends, consumer behaviors, or social movements before they're reflected in stock prices, which means stock prices could potentially have absurd valuations, but still grow into those valuations if they are part of a broader macro trend. And he leverages data from social media platforms, consumer sentiment, and real-life observations to make his investment decisions. We had Celsius, which was a very, very big win for Chris and the Dumb Money crew. I remember watching some vlogs on the Dumb Money channel back in like 2015, 2020, when they were going into stores, trying to understand more if people were drinking this stuff. They were looking at sneaker sales, trying to figure out different shoe companies they could invest in. And then obviously all of you guys got introduced to him because 2 weeks ago, right before Palantir's AIPCon, Dumb Money came out with their podcast on Palantir. I've been covering Palantir for a long time. I'm super excited to get Chris Camillo's thoughts on investing, Palantir, all that good stuff. Thank you for joining the show today.
Welcome. What's up, man? How you doing?
Up? How are you?
Good, dude. Good. Man, Palantir's not doing good today, right? Finally, a little pullback, right?
A little bit of a pullback, down 3% after being up 120% this year.
Probably needed. Palantir, dude, you're like the Palantir guy, right? How was the show? Did you have a good time out there?
Oh, I had a great time out there. It was pretty cool. It was really funny because people saw your podcast and they were like, you guys got to follow this Amit guy. He's the Palantir guy. And everyone texted me like, Chris mentioned you. I was like, okay, that's pretty cool. But it was awesome. Meeting Karp was awesome. The energy there, the culture there was different. And the customers, they could not keep singing the praises of Palantir.
Yeah, that's all that really matters, right? Like I talked about this on my show, and I think a lot of people just don't fully appreciate having a differentiated sales model and having that type of energy level, both internally and externally from your customers. It's just not something we see a lot anymore out of enterprise. Like we don't see that type of enthusiasm in enterprise sales anymore. We used to, like back when I was in the game in like the early mid 2000s, that was the energy that existed at just about every single tech company. Like every company had that energy inside and out, and it was buzzing, and it was just that moment in time. And you don't get that anymore. And Palantir somehow has figured out how to retain and capture that energy, both inside the company and with their customer base. And that's special, man. Like people don't get it. That's really special.
I think it's really special. And there's a lot I want to dive into. Before we get started, I just want you to give a quick introduction for the 5 people that don't know you. You took 20,000, turned it into 60 million. I mean, can you just describe kind of your history in investing over the past 20 years? And then we'll get into Palantir.
Yeah. I've been investing since I was 13 years old. I just turned 50 this week ago. So I've been in the market a really long time. I've seen a lot. I've always been a retail investor. And I mean, the short story is I've tried every type of investing style. But, about 17 years ago, I went back to a style of investing that I experimented with as a teenager, which is more observational based. It's kind of like a modern interpretation of what Peter Lynch did back in the 80s. For those of y'all that don't know him, he was maybe the most legendary fund investor of all time. And he had this observational investing style of just walking the mall and kind of seeing which stores had the longest lines at the cash register. It sounds really stupid, but he ended up managing the Magellan Fund, which is the most famous fund in history. And that really stuck with me. And I had a lot of success as a kid doing basically just that. And even as a kid, I was, had some pretty amazing investment returns. I left that approach for a long time, and then I guess it was my mid late 20s when I was really getting back into investing, I said, let's just take $20,000 and just do that observational investing approach.
Did you have 20,000? Was that like a lot of money at the time?
I had like $87,000 in my bank account. So I took 20 of the 87,000 and I just started doing that. And 3 years later, the 20,000 was 2 million.
Okay, how did that happen? 20 to 2 million in a nutshell.
It was, I can't remember the exact trades, but I wrote about them in my book, Laughing at Wall Street, which I published, I think 2010-ish. So it was from 2000 or 2011. It was from 2007 to 2010. That was the three-year period that I turned 20K into 2 million. And I talk about each of the trades that I made during that time period. And they were all like, just, investing in stuff like, it's just stuff that you see on the street, man.
Right.
Stuff that anyone can see. It's basically trying to identify change in the world a little bit quicker than other people. It could be change in like consumer behavior or cultural shifts or changes in technology. And then it's about connecting the dots back to companies that would benefit or be harmed by that change. And so you got to connect the dots pretty quickly. And there is a process to it. It's not quite that simple. Once you identify the change and connect the dots back to a company, you have to determine that it's a big enough change to move the needle for that company,
Right.
either perceptionally or revenue, right? And once you determine that, you then need to figure out, okay, to what extent does the rest of the investing world already know about this? And there's a little bit of a process to gauge the degree to which other investors are already in tune with that thing that you believed you discovered and connected the dots with. So, once you determine that the majority of investors really haven't put together the pieces yet, or haven't fully appreciated your thesis yet, really the only last thing to do is just to assess the degree that there's nothing else happening at that company that could be more important than that one piece of information that you think is really important during that time period. And so that's kind of the process I talk about in my book, Laughing at Wall Street. And, of course, this entire process became way more digital during the digital age. And Jack Schwager, in his book Unknown Market Wizards, wrote a chapter on me a few years ago. I was one of the 5 equity traders in his book Unknown Market Wizards. And that was probably a better description of how I do that today, which is not walking into restaurants and malls, but more about, like dissecting change through comment analysis on social media. So the majority of my observational investing approach today is working about 3 hours a night reading mostly comments on TikTok videos, believe it or not. That's kind of my golden source of information of like listen, the world is digital now. We all speak to each other, right, through comments. So if there's something that people care about, if there's something that they're passionate about, if there's something that they love or something that they hate or something that they want to do, that information is readily available for any human on earth to discover just by reading what people are talking about on videos. And so
if someone pushes back and says that's too easy, it's too easy to just read TikTok comments, what would your response to that be?
I know it. I love that it sounds like it's too easy. In fact, for 5 years, I had a company called Ticker Tags, which was the first social intelligence company for hedge funds and Wall Street. And I sold basically, I sold software that enabled hedge funds to quantify the volume of conversation around very granular topics that were connected back to products and brands that were important to publicly traded companies. And what was amazing is over that 5-year period, I met with every major hedge fund in the world at the highest levels. And I was basically coaching them on what I call conversational analysis. And they all said the same thing. They were like, this is crazy. Like they audited, they had access to my personal track record. And that's the only reason they took a meeting with me, is because they would find out that, hey, this person generated X results over 15 years. So, his software must be good, right? and so, but what was amazing is that they were all really excited about it, and they kept meeting with me, but their teams were just not willing to put in the time and effort to really become competent at conversational analysis and social arb trading, which is what I do, even though I had an institutional platform to help them figure this out. I eventually sold that company to Jefferies Bank. I was working closely at the time with Goldman, with the Bank of America, with Jefferies Bank, and I was also teaching sell-side analysts how to do this. And then if you go back to the late 2000 teens, a lot of those reports actually cited data from Ticker Tags, which is the platform that I had built.
Right.
But even the biggest hedge funds in the world either don't believe that you could actually do this repetitively, because the really interesting thing about this type of data is it is not, you can't build a historical correlation between the amount of time someone talks about this and this stock price, right? Because conversation is evolving, it's changing, it means different things all the time, right? So you just have to use common sense. But what I love about it, so it's basically, it's not precise, because you can share a thesis that you came up with by analyzing conversational data on videos, and you could share it with 10 analysts, and they might all have a different opinion on how that will impact the stock.
Right.
And that's where the magic is, because Wall Street really relies mostly on transactional data sets like credit card data, scanner data. That's how they get an edge on retail traders, is because, weeks before an earnings report, Wall Street has a pretty good assessment of what's going to happen. I say pretty good. It's not like perfect, right? But it's based on transactional data. So how do we get ahead of the transactional data as retail traders? Really, the only way to do that, because the transactional data is usually many days to weeks old, meaning it's someone that actually made a purchase with a credit card that has to go through the system, be aggregated, get filtered, sent to the funds. They have to assess the data, clean the data, make a decision on the data. So how do we get ahead of that? It's by analyzing what people are saying in real time. Like, what are they going to buy today before they even purchased it?
So let's get into Palantir then. So speaking of the institutional divide in terms of data and access to data, I started this YouTube channel and really when Palantir was like $25, and it collapsed all the way to $6. And then for the next 2 years, it was basically stuck from $6 to $8. And Wall Street was telling me Snowflake was the buy. Wall Street was telling me, Databricks or Datadog is the better version of Palantir. Palantir was down 80%. All we had in this community, the people that are here in this chat, was each other to crowdsource information, try to get as much data as we can to try to figure out, hey, is Palantir the real deal? Now, we had to look at lots of Karp interviews. We had to look at these deals. We had to look at customer testimonials. But ultimately, from that $6 range, we're now sitting at almost 40. It has worked out. So I guess my first question for you is Palantir still part of this social arbitrage strategy that you have? And then when did you kind of start getting into it to think there is an advantage retail investors have over institutions on Palantir?
So it's different now. Like the thesis and the trade on Palantir today, and to be clear, I basically have built my position in Palantir over the past 4 months. Okay. And I recently added a week ago. So like I'm still adding Palantir. You had a thesis. The Palantir people, believe me, they've been in my ear for 3 years, like nonstop. I thought they were all nutbags. It's just, I have looked at Palantir over the years, and it's like I don't want to say I didn't see it. I didn't want to commit the time to actually fully understanding it, because it wasn't clear to me. The path wasn't clear to me. And, there was a reason I did not invest in Palantir, 2-3 years ago. What I regret is not taking another hard look at Palantir like a year ago,
right,
when they clearly were starting to gain traction on the commercial side, that if you would have taken the time to do the homework, you would have clearly have seen. Now, you and all the Palantir people out there obviously were already aware of the company and studying it on a daily basis. So you saw that and you had the confidence to kind of probably double down and stick with it. I just simply didn't look at it, right? So like I didn't pay attention to, because I've been hearing about Palantir every day for years. And I was like, me hearing about it last year, like what was different? I didn't even give it two seconds to even think about it.
And when you heard it, I'm assuming you thought government company as soon as you heard it, right?
Well, I knew they were trying to move into commercial, but the extent that I didn't spend the time to assess whether they were having success with their early commercial efforts. And that's what my mistake was, not getting into Palantir earlier. But honestly, like, you got to remember, in early 2023, I went all in on NVIDIA and then SMCI, right? So like a good chunk of my portfolio was just in those two companies. So I don't miss not being in Palantir. I think I did better in those two companies than I would have done in Palantir.
I would imagine. Yeah.
So that said, the thesis is different now. It's different. Okay. So the cat is a little bit out of the bag in terms of, yes, this company has success in commercial, right, with commercial clients. So the question now is, how large can that success be? So going back to a trade I made many years ago in a company called Salesforce, right? I was a sales. I talk about this, like my career before I quit it to become a full-time investor was in sales.
Well, when did you quit? How many years ago?
I quit my job right around 2007, which is when my audited track record for trading started. Right.
So you're about 30, about 30 years old at the time.
Yeah, I don't know, something like that. So, my track record right now, I'm going on 17 or 18 years of like 70 some odd % annualized returns total portfolio.
Holy shit.
And my goal is to hit 20 years. So I'm really hoping that I don't screw up the next 3 years.
So you're outperforming, you're outperforming Jim Simons.
Yeah. So I actually was playing around with the new ChatGPT this week, and the old one annoyed me because it was like the one question that I knew I always wanted to ask it and have it accurately answer was, who are the best performing traders in history with a minimum 10-year track record that has been cited and or audited by a national publication or independent book, right? And I finally was able to get enough proper prompts in with the new ChatGPT, and it listed the top 20, and it did have me at number 1 out of the top 20. So I mean, but again, you can't really compare someone like me that's investing 7 to 8 figures, has a 7 to 8 figure portfolio against someone that's managing $1 billion portfolio. Right. That's not really fair. Also, an institutional trader has a regulatory environment where they have to, they can only invest so much in a single company. It could only represent so much of their portfolio. So like, let's be fair there. That said, I'm competitive. It's what makes it fun. And I do want to be the best trader. Like, I do want to be number 1. Like, only for fun, right? Like, I think that would be really cool to kind of have that be a legacy of achievement. And so it's something that does drive me to continue to do this in a really good way. Anyway, getting back to Palantir though, when I was selling for a company, I realized what was happening with Salesforce. It was quite clear, right? Like, when all of your friends are salespeople at large Fortune 500 companies, and you're all in the early process of onboarding or assessing, transitioning over to Salesforce, which, by the way, takes like 1 to 2 years to even make that decision. And then once you make the decision, it takes another 1 to 2 years to actually onboard the software. So it's like a 3 to 4 year full cycle. So what was interesting about that is it takes a long time to go from, hey, I think we're moving the entire company to Salesforce, to actually signing a contract and then building out Salesforce, like implementing it in your company. And I knew that. And I was able to see Salesforce well before other people. Again, that was a change. That was a massive global change that was happening inside every single company in the world.
Right.
Not that every company moved to Salesforce, but a whole hell of a lot of them did, right? Over that 10-year period. I think we're seeing something similar here with Palantir. So the thing that excites me most, if I can go back, like I would say one of the easiest ways to trade these companies that are in essence, sales companies, is it's all about it's a cycle. It's this cycle, right? These companies sometimes exist for years to decades, and then at some moment in time, they have the right product mix at the right time, and it's just like all the worlds align. So what usually happens is those companies get hyped because you're hearing about them, but people don't realize that like that's not going away for years, right? It's like a multi-year cycle, and people underestimate just how massive those companies can become. Because what I'm seeing at Palantir right now, with their client base, I can't really figure out what the hurdle would be to them not rinse and repeating that every day for the next 12 to 18 months. So I'm thinking if there was any company in the world I want to sell for, it'd be Palantir right now, right? Like I tell salespeople this all the time. Back I used to coach salespeople. I'm like, hey, you should be spending more time figuring out what company you want to work for than trying to be better at whatever company you work for. You can be a middle of the road salesperson at a company that's going through one of these super cycles and make 5 times more than the best salesperson at a company that's not going through one of these super cycles, right?
Right.
So this has nothing to do with investing right now, but this is just how I think about companies generally. Salesforce is having one, Salesforce. Palantir is having one of those moments where they picked a really unconventional sales model. You're aware of it, right? Like, basically the test drive sales model.
It's unheard of in SaaS. Unheard of.
Completely insane. It's actually freaking insane.
You can curse.
Like,
it's okay.
If you told me you were going, like, here's the thing. When he used to talk about this model before it, like, started to work, there was not a single person that didn't think he was mentally ill. Like what what? Like, what do you, because who's going to even give you a chance to do that, right? Like, how many company, like, you're starting, instead of starting with a large top of funnel, you're starting with the top of funnel that's like that big, dude, that big. Because how many companies are just going to be like, yeah, we'll commit that much time and resources and open up our data to you, who, by the way, you're a very odd person. And like, do we really want to do that with you and your weird government style company that you have? Like, it's just weird. But here's the thing, dude. Here's the thing. If in that 1 in 100, scenario where that model actually works, and you start to see your competitors, like Palantir's now in the news. He's on Bill Maher. Everyone's talking about Palantir. The stock is up 6, 7x from its lows. Like, company after company are instituting Palantir. They're talking about how they're saving tens of millions of dollars right off the bat. Like, if you're a CEO or if you're head of sales for any of these companies right now, you're like, dude, we probably need to do this, right? And so I could only imagine what that pipeline looks like right now for Salesforce. So again, I'm saying Salesforce. I'm going back 15 years, dude.
Hopefully we have a similar result. Hopefully.
I could only, by the way, Salesforce is a $280 billion company, right? We'll see what happens with that. But like, so I'm looking at the next 12 to 18 months. Are there risks? Absolutely. Like, I'd actually love to see Palantir fall 20, 30% right now, because I'd love to like go in deeper on it. But I love the risk reward of the next 12 to 18 months. I'm not like you guys. I'm not looking at Palantir like 5 years out, 10 years out. I'm not like, Karp thinks it could 10x probably over the next decade. I think if everything aligns, if AI doesn't completely disrupt the software ecosystem to the degree that you don't even need Palantir, and it's like you don't need anything.
Yeah.
I think that's a possibility for Palantir, no doubt about it. But my head's not there. My head's in the next 12 to 18 months. I have no issues getting into a company that, by the way, you guys are a little biased because you're like, oh, it came back up from 7. Like, forget about it. You could make a case it should never have been down there to begin with, right?
Yeah.
Like, ever should have been. That was just misunderstanding. Institutions don't really care about Palantir. Like, it's just weird CEO. Like, people were always kind of like assuming the whole thing was weird and a scam, right? So in government. So forget about that. It's an 80 or 90, what, $80 billion company, market cap company.
Okay,
right?
so hold on. When you say and you brush your shoulders to the $80 billion company, you got to help us understand this because all of us have been here. The 1,600 people in the chat, all of us have been here when it was like a $10 billion company. $80 billion to us sounds a little ridiculous for a company doing less than $500 million in profit, which with most of that profit coming from their cash from treasury bills. How do you look at 80 billion and you're like, it's not a big deal?
I mean, look at Salesforce at 280. I mean, think about when Buffett made his investment in Apple. It felt like the latest investment ever. Remember that?
Yeah.
Remember when Buffett
finally 500 billion when he invested.
And we were all laughing at him. We're like, dude, 12 years late, man. Right? 12 years. He's like, I'll make it up with volume. I'll make it up with how large my investment's going to be. Right.
Right.
And you know, I'm kind of finally at a point where I could kind of do that too. Okay, maybe Palantir doesn't 6 or 7x over the next few years, right? Maybe that move is over. Like, I don't really care about that. I'm not looking at like a 6 or 7xer here. I'm looking at it, you know, risk reward Palantir over the next 12 to 18 months. As we continue to move through what I believe, at least my thesis, is that we are still in the relatively early stages of a sales super cycle for Palantir in terms of adoption of their software at enterprise companies. So listen, you hear what I just said? That's my thesis. Okay.
Yep.
So now, based on that, I don't trade stock price. I don't do it. I don't care if I don't even know what Palantir is trading at. It's like 30 something or whatever. I don't, the valuation, you can tell, like, I barely even knew what the valuation was right now. I knew it was like roughly 70 to 90 billion, I think. I don't trade stock price. So for me, it's not like I'm getting into Palantir for a 2x or a 3x. I want to trade this sales super cycle. I'm going to make an assumption that over the next 4 to 6 quarters, we will continue to see surprisingly positive news come out of Palantir because they've gotten past that tipping point to where now, instead of them having to convince the world that they're special and you need to pay attention to them and you need to take a look at their product, now everyone is coming to them. And if you look at just the few clients that they don't have very many clients. They only have like a few hundred enterprise clients, which is actually very small. Okay.
Yeah. Yep.
When you look at those clients, the one thing that really impressed me was if you look at how many of those clients have been around a few years, which are like very small, very small. You look at the increase. They're really elevating their spend levels over a few years. So the assumption is we're going to see that with all 300 of their commercial clients. Plus, we'll see them start to continue to onboard more and more and more clients over the next 18 months. That's what it's not a complicated thesis. And listen, I love the risk reward when you have a companies going through these cycles historically, regardless of valuation. If valuation is elevated, more often than not, unless something really meaningful happens in the market to bring down valuations as a whole, the valuation will continue to be elevated, just be elevated on a higher base, right? Based on that revenue growth. So I feel comfortable that Palantir is more likely than not than not to knock it out of the park the next 6 quarters, 4 to 6 quarters. And I'm comfortable with whatever the stock does over that time period, because I don't think people still really grasp what is happening in the enterprise world. I speak to my friends in the enterprise world, and they're telling me that it is the weirdest, it's like the weirdest moment in time. Like entire companies are like, what the, like, we need to rethink everything, like literally everything. Okay. And there aren't that many options. Here's what's so amazing. It's like, kind of, again, I'm going back to Salesforce. When all of us adopted Salesforce in the 2000s, it wasn't like there were 50 options. Like, are we going with Salesforce or these other? It was like, it was just Salesforce.
Right.
It was like they were like the cloud CRM company. And you know what the worst part was? They kind of sucked, dude. Everybody hated them. Everybody hated them. We hated them as salespeople. The implementation people hated them. There was not a single person that I know that liked or enjoyed using Salesforce. You just kind of had to do it, man. You had to do it. Every company was doing it. So once every company started doing Salesforce, you had to have Salesforce. So what's happening now? I think we're going to start to see every big enterprise incumbent company go, oh, AT&T is doing this and they're saving how much money? Oh, wait, what? That hospital system is saving that much money? Well, why does Palantir only have 3 or 4? They should have 100 hospital systems around the world, right? Like it's not difficult. What, you don't have to overthink this. You don't have to overthink it, right? It's not over. Like, they are the AI software company for enterprise. They are the AI software company for enterprise. That's it. That's the entire thesis. There aren't 20 or 30 like AI software companies for enterprise. Like,
so let me summarize this up and let me know if you think this is accurate, because I think what you're saying here makes a lot of sense. I've been justifying the premium on the valuation here on the channel for the past couple of weeks based on what you just said, that, hey, they're the only AI software company around. That's why the market is obviously just saying, hey, like, we'd rather buy Palantir over Snowflake because Snowflake doesn't have an AI plan. Palantir has an AI plan. Even if Snowflake has more revenue than Palantir, it's about future growth. You're saying, hey, Amit, 85 billion, the quantitative metrics don't make sense. Price to sales, price to earnings, it's the most expensive name in software. However, there is a super cycle of enterprise AI adoption. Palantir has already started reaccelerating growth over the past 2 quarters. If that continues to reaccelerate, even if it's not 100% growth, if it gets to 35, 40, 50% growth, the valuation is not going to matter because the market is going to want that story. And over the next 12 to 18 months, you think that story is going to be worth more than 85 billion.
Yeah, again, I don't look at valuation. So I don't look at multiples really, or other than multiples, it can be a signal of how the market views a company. That's the
so why don't you look at multiples at all? Like, you know, like, entry price matters. If you bought Tesla at 400 at the top, you know, that matters.
No, what the only thing that actually matters is expectations and what people know about a company versus what actually is happening. So multiples to me don't matter, because if people are assessing, hey, if you feel that you know something about Palantir that isn't being appreciated by the market, once the market sees what you see, that should be a positive reflection on the stock. Period. Right. So if the stock was trading at 20 PE before that, it will still be, it doesn't matter, or 100 PE before that, right? It just doesn't matter. It's never mattered for me. Like, none of this crap matter. Listen, I'm just telling you how I trade. I'm 17 years in at 70+% annualized returns, and I only think about one thing, and it's information and alpha. That's it. If I feel that there is information that is unknown or being underappreciated by the market, that the market will come to terms with over a period of time, I trade at the point of information imbalance and I exit at the point of information parity. That's it. That's the only thing that I do. I don't do anything else. And I do it all off of like this trading machine right here. Like, this is it. And so like I trade off of like Schwab, which is whatever. And by the way, placing the trades, I don't even barely look at them. I don't. Sometimes I like buy the wrong stock. Like I'm not. I'm that bad. I'm that bad. But what? Because and sometimes I'll spend like 30 or 40 or 50 hours doing deep dive social arb research on a company, and then I'll place the trade and I'll mess the trade up, and I won't even realize it till the next day. You know, like I'll buy an option, but I'll like buy the put instead of the call. Like I'm not that's happened at least 3 or 4 times in the last 10 years. And it's because I don't value the fact that, oh, did I get the wrong strike price? Should I have gotten this other exact strike, or I just don't care about that. That's not where my energy flow is going.
So does your energy at all care about JPOW and 50 bips and rate cuts?
Oh God, no. I watch every once and I laugh. I was just with my buddy Kevin, meet Kevin, out in Vegas at his show, and he always wants to talk about that stuff, and I was like, dude, whenever I just want to know about that, I just watch your show, dude. That's it. So I was like, he does such a good job covering that. I was like, if I want to know, if I want to get someone's perspective, I'll literally just go watch. I know every other day he's doing a show on it.
Yeah.
So I'll just go watch his show on that. But I could care less. I could care less about macro anything. Macro is
in 2022, when interest rates went up and the macro collapsed, you went heavy on NVIDIA because you saw AI. You didn't care about interest rates going.
I didn't care. I never care about. There's only one time, 2 times I've ever cared about like a macro environment. One was during the 2008 crash. About a third of the way into that crash, I decided I wanted to completely cover all my long positions, hedge them, excuse me, and I did. I think I ended up having like an even-ish year that year, roughly. And during the pandemic, I went all in on the macro trade that was COVID. And, people all know this story about me. Before COVID hit, I was interpreting Chinese newspapers, trying to figure out what was going on. I became obsessive about it. I didn't sleep for 3 weeks. I was spending I think I was spending 5% of my portfolio on weekly put options, and losing all my money every week for three or 4 weeks. So I lost like 20% of my total net worth portfolio.
Holy shit.
Shorting, basically buying puts on the S&P and buying puts on casino and airline stocks. And the market never moved. And I thought I was going mentally. I was like, there is a pandemic that's about to hit the world, and I'm the only person that cares or sees it. And I was watching CNBC back then just to see what the hell people were talking about. And the market fell 2% one day. And I'll never forget this. The market fell 2% because of, worries about this thing coming out of China. And they were like, this is what we've been waiting for. This is the buying opportunity we've been waiting for. I was like, I thought I was going to put my fist through the TV screen. Okay.
You had a real Michael Burry moment in 2008. He was going crazy as well, right?
Yeah. But like I did it one more week. I lost 20% of my poll. I did it one more week. And finally that next week was when the market came apart. And so that was the year that everyone knows that this is like the year that I really amped up on like YouTube. I was on every day talking about this, but I think I got like a, I don't know, 400, 500% return total portfolio that year. Cause I shorted the market. And then of course went long on the, I think it was exactly 1 day after the dip, 2 days after it bottomed. But again, that was the only time that macro mattered. And the reason why I cared was because the macro was a social arb trade for me, right? It was based on something very real that nobody saw for whatever reason or believed to see, because it was a black swan event that people's brains just couldn't process.
Right.
So for me, I was willing to trade macro because it was an information arb or whatever social arb trade. But what can I bring to the table in terms of assessing JPOW or interest rates that a billion other Wharton grads that just literally just do nothing but think about that crap all day long. I mean, honestly, you ask 10,000 people about this, they'll give you 10,000 different answers. I am not going to try to compete with a 10,001th opinion
Right.
of what that's going to happen. Like, I just, what the hell, how would I know more than them? Like, it's irrelevant. So I'm going to stick with what I do best. And I'm
So
going
let
to
me
ignore
let me ask you this: are you still in the NVIDIA trade or no?
Yes.
Okay, so Stanley Druckenmiller rode NVIDIA from I think 150 to 900. He got out of it a couple months ago, and he went into Palantir. Now, not all in Palantir, but the general thesis of his portfolio was starting to shift from the hardware plays into the software applications of AI. Are you of that opinion that a lot of the AI value is not going to go to NVIDIA now? It's going to go to software companies?
Maybe. Yeah, I am hedging around my NVIDIA trade often, just to be clear. So I've hedged it twice recently to where I'll hedge like 70% of it. So I'm being a lot more cautious with my NVIDIA position now, but I just don't want to take the tax hit. Yeah, I know that sounds great. By the way, I always regret this. By the way, I do love NVIDIA besides the whole tax situation. And I do think I do like the risk reward on NVIDIA going forward, which is why I still own it. But my tax position contributes to that as well. But yes, generally what you just said about it moving from picks and shovels to applications is a big part of the Palantir thesis for me. And what's so fascinating about that thought is that there aren't that many applications that are worth anything in AI. This is the best part. I love it when you only have the reason why Palantir is, I guess, trading where it is PE wise, there's not that many options, man. Like, if you want to invest in the application side of AI, what the hell are you going to invest in? Like, there are things you can invest in the private market, but even that stuff, I see all that stuff. None of it looks super convincing to me.
You don't like OpenAI at 150. Let me not even bring up valuation because you don't care about that. But you don't like OpenAI compared to.
I'm not saying I don't like it. I'm saying that I don't think I know anything about OpenAI that everyone else doesn't already know about OpenAI or fully appreciate. And I think the risk reward looks a little bit different on OpenAI because there's an unknown about how much of this power is going to be in the hands of the LLMs in terms of monetization, right? Like, because you have five big ones, right? You have five big ones. To what extent is there going to be pricing power, right? Or to what extent, how much pricing power will there be in those models long term? I have no idea. It could be incredible, or it could be like it could get democratized. I just don't. I don't have the answer. But you know what I do have the answer to? I think is that I don't think in the next 18 months there are any players in software that are going to be able to easily replicate what Palantir is doing in the marketplace with enterprise AI solutions. I think they are not only in the pole position, I think they have obscene amounts of pricing power in the marketplace right now, because when you're looking at a solution, it's not like, okay, we're looking at Palantir and these other four companies that do basically the same thing, more or less. Which one is slightly better and which one's getting us the best deal? Again, you have to understand, I come from a place of, I'm a sales guy, right? Like, I sold software, right? Like, I sold software solutions. That was like my career before I became a full-time investor. So I'm a bit obsessive and I don't think Wall Street has a freaking clue how important the sales cycle is and sales differentiation is. I don't think any of these guys have ever worked a day in their life in institutional software sales. And I have so much respect for differentiation in that model. And when you actually have that much of an advantage to where you're not selling against someone. Usually when you're not selling against someone else, you're having to convince the sector or your clients that they should even talk to you or that you have a product that even they should even care about.
Right.
Palantir is in this weird place where, like, very recently, by the way, like right now, like very recently, as we're speaking, the market, these boardrooms are all realizing we need an AI solution. We don't just need like AI, like we need an actual AI solution here that is enterprise that can take the AI and really help us do things with it across the entire organization that can help us solve problems, right? So who is that? And it's so obviously Palantir. It's a special moment in time for that company. And I don't know if in 18 or 24 months, if they're going to have multiple competitors that they'll be dealing with, if AI will start to displace what Palantir does. I have no idea. All I know is the next 12 to 18 months looks damn good for them. Forget about stock price, just as a company. Like, that's a company I want to be at the next 12 to 18 months selling for. Right. And so if I want to be at that company in a sales job, like if you were like Chris, you could just take the next 12 months off of investing and just go be a senior salesperson at Palantir. I might consider it, dude. Like, I'm not kidding. Like, I might consider it because like that is a platinum job right now. So the fact that I would do that, how can I not invest in Palantir? Like, how can I not?
I think that makes a lot of sense. And the reason I brought up OpenAI is because, as you said, the LLMs ultimately will be commoditized. Maybe OpenAI wins and GPT wins, but I know you've done some research on this. The reason there's maybe not that many multiple competitors like OpenAI's multiple competitors because that ontology that Palantir has that makes those LLMs useful, that is where I think the AIP bootcamp start to accelerate, because if no one else has the ontology, no one else has AI that's useful.
Today, and my concern for Palantir in 3 years, okay, 2 to 3 years, is at what point does AI create the ontology for you?
So talk about that. This idea that software will get commoditized by AI itself. We're seeing this with Klarna getting rid of Workday and Salesforce. How are you thinking about that conundrum in enterprise SaaS?
So we just don't know yet. I think the really important thing as investors for us to remind ourselves every single day is that as it relates to AI, none of us, and I mean zero of us, can confidently predict how this is going to play out over the next 5 to 10 years. I lived through the dot-com heyday, okay? Like, I was there in 98, 99, 2000. I was there in the middle of it. Do you know what we thought e-commerce was going to be back then? If we go back to 99, 2000, do you know what we thought e-commerce was going to look like in the future? Want me to tell you?
Yeah,
there was a company called mall.com, and I'll never forget it because mall.com, if you went to their homepage, they basically would configure like a footprint of a mall, like a diagram of a mall with stores. And that's how you would navigate the internet. You would literally like hit on Neiman Marcus or you would hit on Macy's, and it would take you, the way that you would see Macy's products is you'd have to go along the diagram of the mall, like the 2D diagram of the mall, and find the store, and then you could see. That's how dumb we were back then. Like, there's no way that anyone knows how all this is going to play out with AI over the next 5 to 10 years. So I think what we learned from that is let's not even try. There's no reason to try. Let's just look at like 12 to 18 months out. I do think there is a chance that AI itself, if you listen to Sam Altman, he's hinted at this, that the AI itself will displace everything. And I do believe that that's possible. I just don't know how long it takes until we get there. I don't know if that's 3 years or 13 years or 23 years. So I don't want to try to figure that out right now. There's no use in doing that. I do want to say that my company, Ticker Tags, we were an ontology company. So that company was based on hand curating. I think we had I don't know it was like 1.3 million word combinations that we hand curated, that each of those word combinations represented how someone would speak about a topic or a brand or a product that we would want to capture in a tag. So those are the word combinations that we would then capture the volume of people on Twitter that said that word combination, those words together in a tweet. And that would represent the volume of people discussing this granular topic. But we had to hand curate that over the course of 2 years. I had 40 people in the room doing nothing but literally analyzing everything about a company. And then they would look at how people speak about the product on Twitter and curate tags. So like, I have a lot of respect for building ontologies, because it's an incredible amount of work, and you can't just brute force do it. To create an ontology, you need to have a thorough understanding of the context and the company. Like in this case, for what Palantir does, of the company. You have to really understand internally what are the things that matter, right, to that company. And it takes a tremendous, it just takes knowledge, and it takes opening up your data, right? And they somehow figure out a way to do it really quickly, but they have cracked the code on doing that. But don't think for a second that other people aren't going to come racing in trying to do the same exact thing. So I have no idea who else is going to be knocking on that door in 12 to 18 months. And I don't care. I don't care. Like I'm not like, I don't care if I'm out of Palantir in 12 months and never think about it again for the rest of my life. Because I just don't become emotionally involved with companies. Right? Like
not like me with Palantir.
Yeah. I mean, that, and by the way, it's fine. I love it that there's guys like you, because if you're having fun doing, and by the way, I take it back. I do become emotionally involved with companies. I actually do, but then I break off those relationships in a second. I never look back. So Celsius is a great one.
Can you tell me about this? What is your history with Celsius?
Celsius, I had a really strong thesis on Celsius. I wrote about it, like, I don't know, a year ago, and I was already invested at the time. And it was a tweet thread that I had that anybody can go back and read. But I did know that there were risks involved with Celsius. There were numerous things that could happen. One of them would be simply like a social video that went viral that would propagate false news about the company, which, by the way, is exactly what happened. And I still have a thesis that might have been the thing that contributed to Celsius sales flattening to some extent, right? And so I knew that could happen. So what I did was I went out and I spent an insane amount of money, like the amount of money that I went out and spent to buy Celsius data weekly. So I'm basically buying transactional swipe data on Celsius every week, just like the hedge funds do.
Is that expensive or no?
It's very expensive. Okay. Yes, it's ridiculous just for one company, for one freaking company. And so I get that data every week delivered to me the same exact time as all the hedge funds do, right? There's just like a few hundred people in the world that get that data on Celsius. And I was keeping an eye on it. And then 1 week the data fell apart. And I was like, 1 week is not enough to set a trend. Like it could have been anything. It happened again the next week. And I immediately came out and I discussed it on our YouTube channel, our Discord. I think I tweeted about it. I'm like, guys, I'm out. I don't know what's going on. I think I might know what's going on because it was the same. It was about 5 to 6 weeks after that video went viral with that guy who basically said that Celsius had cyanide in it. And people didn't realize how viral this video went. So viral. I don't even know what the total view count of all the shares was because it got reshared over and over. And then people were stitching the video on TikTok. Like we could be talking about hundreds of millions of views if you include all the stitches. So I was like, now I didn't know the degree to which people might like lay off. And when I say people not buy Celsius, like even a few percentage points of people stopping to buy Celsius would be enough to flatten the sales out, right? Temporarily.
Right.
That's what people don't. It doesn't take much. It doesn't take much. And that's exactly what, again, I don't know that that's what led to it, but I do know that that's what happened in terms of their sales. And I was like, I'm out. Now, my regret is that I should have gotten out and shorted. I should have gone out and shorted, right? But I just got out. So I got out at like the peak, pretty much.
Like 96-ish, around that range.
I don't remember the exact price. It was within 10 or 15%, I think, of the peak, which was, it was looking back, it was glorious.
This was a big part of the portfolio, Celsius, or was this a big part of the portfolio, Celsius, when you got out?
Oh yeah. It was a monster trade for me. Well, I mean, I wouldn't go out and spend that kind of money to buy data on one stock just as insurance. So looking back, I'm so glad I spent the money. On that data. But
can you tell us about some of your biggest losers? Do you have any big losers?
Yeah. So my biggest loser, the one that I still lose sleep over, but I learned so much from it, man. And this is going to make you feel good about what you do at Palantir. And this is why you need to follow guys like Amit. Did I say that right? Amit?
Yeah, you said it right. You said it wrong they were like, he said your name wrong. I was like, guys, it's not a big deal. Like,
I'm terrible with that.
But trust me, I'm terrible with pronunciations as well. The chat will tell you that. Yeah.
But this is why you need to follow guys like this. So I invested in a company right before the pandemic. It was called Restaurant Brands. They own Burger King, KFC, and Tim Hortons. Okay, so two of the three companies that they owned, I had a monster social arb thesis on. Burger King had the Impossible Whopper at the time.
Correct.
It was maybe the biggest thing that Burger King had ever done. Okay. My social arb analysis, I probably put 30-40 hours of social arb analysis into that trade. And I was like, this is the biggest moment Burger King has ever had. KFC had the chicken sandwich. Wait, was it yeah. Because a KFC, not
or
KFC.
Popeyes had a really
Popeyes. When I start thinking about old trades, there are like dozens between, like 50 of them between then and now. So okay, Popeyes had the chicken ward. Remember the chicken sandwich?
Yep. People died over that sandwich. Like legit died. Yeah.
That we did a whole episode just on that sandwich. That by far, indisputably, was the biggest thing that ever happened to Popeyes. So two of the three companies that they owned were having the biggest thing in history happen to them in the same freaking quarter, dude. Okay, I was losing sleep over this. The problem was those two companies represented about 40% of the parent company. 60% of the parent company was Tim Horton. I did all this work on Tim Horton, everything I could do for my house, any place where I can scour data on Tim Horton, I was doing it. Bottom line, Tim Horton had been like flatlining forever. Nothing ever happens at Tim Horton, dude. Like, it's just Tim Hortons. So I was like, what could happen at Tim Hortons this quarter to screw up my trade? I mean, that would be insane. What could possibly happen at Tim Horton? So I went all in on that trade, dude. All in on it. So what happens? Earnings come out. It was the quarter of all quarters for Tim Hortons to screw up. Right? I was like, and so the company comes out and it's like, record sales at Burger King. We've never seen anything like this. Record sales at Popeyes. We've never seen anything like this. And it was like, Tim Hortons were having some issues. And I'm like, wait, what? And so it wasn't even like the stock got like crushed or anything, but I was in massively levered call options.
Oh,
I mean, we're talking like 20% of my net worth in call options on this company. Gone.
The Canadians don't drink enough coffee. That's it.
all gone. So here's what I could have done to save that trade. I didn't realize that literally 3 weeks earlier, there was the Tim Hortons annual franchisee meeting in Florida. Okay. Every franchise person for Tim Hortons, not every, but a lot of them went to Florida. And supposedly, after the fact, I learned this, there was like a massive, like, just angry mob of franchise people talking about how shitty everything was going and their sales were starting to fall apart that quarter due to these decisions that were made at Tim Hortons that nobody would have known about, like just looking at consumer data, right? Like it was all like the franchisees knew and they were there. I could have gone to Florida, sat at the bar, literally sat at the bar and just spent 2 days talking to franchisees. And if I would have done that, I would have probably saved myself a 7-figure loss that I had to take on that trade. It was the one time that it was the one trade that I actually, like, I think I went to bed for 2 or 3 days. And I'm not joking. Like, I was actually, I don't get depressed. Like, nothing gets me depressed, but that one shook me because it was like I was on such a high conviction high.
Yeah.
Like, I had so much conviction in the trade. There was nothing that was going to disrupt that trade, and it did. So I learned my lesson, and that's, you know, I learned this lesson over and over again through the years. You don't know what you don't know. There are always risks that you can't see, and you have to understand that those risks are out there. In this case, you cannot leave anything unturned, right? In a trade. And even when you do all the work, you still have to understand that there are risks that are out of your control. Another risk was on a company, a toy company, where I completely crushed the analysis. This is actually when I had my hedge fund. I had a hedge fund for a few months back in the mid-2000 teens called Social Information Arbitrage Capital. I spent 2 years raising money for the fund. I had made 2 trades before I had to close the fund down because I started the fund at the same time that I started ticker tags that I was selling to hedge funds. And my hedge fund clients told me that I wasn't allowed to manage a hedge fund on the side because they were afraid I was going to front run. I thought I would front run my data, which makes sense. I would front run my data for my own fund, and then they would get the data a day late and trade on it, and I would be front running all my clients. The fact that I didn't see that people would think that makes me an idiot. So I had all these investors in my software company and all these investors in my hedge fund, and I was like, I have to close the fund down, and I just gave everybody their money back.
Yeah.
But before I closed the fund down, I made this trade on this toy company that made the Elsa doll. Remember the Elsa doll when that movie had come out, Frozen? And it was the biggest product that the company had ever made. It was the biggest quarter that company would ever have, ever. Jack's Pacific is the name of the company. And I knew that this was going to be the biggest trade of my life. And it was like my first trade in the hedge fund. And earnings came out. It was pure all levered call options in my hedge fund. Huge trade. Earnings came out, and the stock before the market opened was up 30%. I was going to be up probably 300% on my options.
Yeah.
Like, this is it. Like, my first trade out of the gate. Stock opens within 1 minute of market open. It's down, and it closed down, I think 30% ish on the day. And I was so distraught. I didn't know what happened. I didn't know what happened until like a month later when the report came out that the #1 institutional owner of that stock, Jack's Pacific, they owned over 10% of the stock, had dumped their entire 10% position in one day, that day that earnings came out. So behind the scenes, they had become so frustrated with this company, and they were looking for an exit window. But the company was low liquidity, and there was no exit window. So when they came out with this blockbuster earnings report, that was nothing but insanely good news that no one could have ever predicted. They use the liquidity and the positive momentum of that report and buyers to flush out their entire position and crash the stock 30% in one day, which, by the way, is kind of an insane move. I've never seen someone do that. But of course, like, that taught me, that was a real lesson of, like, you just don't know. Even when you're right on every metric, if someone who owns 10% of the company decides for some random reason that has nothing to do with the fundamentals of that moment in time, you're done. You're dead in the water. And it has nothing to do with your research. You can do everything right. So there are always things that you don't know in the market.
Let me ask you this. A lot of people are getting upset about this. Karp sold 9 million shares. What are your thoughts on that?
That's nothing. Who cares? Like what would that have to do with anything? So I think that Karp, if I were to have a thesis on why he's just exiting generally and why other people have exited Palantir that have been in early, I think these people are smart enough to know Karp. I believe Karp when he says his company can be 10 times the size, and I believe he's going to do everything in his power to make it a 10x from here. That said, he's not an idiot. Other people that have supported Palantir since day one are not idiots. They see what's happening with AI. AI brings in a tremendous amount of unknowns in the far off future. And when I say far off future, I mean like 2 to 5 years or 2 to 10 years.
Right.
They are well aware of the fact that there is an outlier chance that AI comes in and wipes out all these companies, including Palantir. Now, it won't happen in 2 or 3 years, but people might start to understand that in 2 or 3 years and might start to sell off all these companies, right? I've said this. There's a new world order coming that AI is ushering in. We don't know exactly what that looks like yet. So when you have something like AI, you have to start to de-risk yourself in certain ways. So if I were Karp, I would be, he still has an insane amount of Palantir, like, but you can't just sit there with 100% of your net worth in a company that could theoretically over the next decade start to get wiped out by this new magical technology that we have called AI that nobody knows what's going to happen yet. You just don't know. And so it makes sense.
Do you think insider selling in general matters for companies? Insider selling?
I'm sorry, what?
Do you think insider selling in general matters?
Insider selling sometimes does, but usually does not. You've heard this a million times. There's an infinite number of reasons that people sell. Infinite number of reasons. Only one of those reasons is because they're concerned about the short-term viability of that company.
Right.
And so I'm not going to get into all the reasons why because we would be here all week talking about them. It doesn't make sense for anyone to be that concentrated in a single position ever. Period. It just doesn't. You look at Jeff Bezos. Jeff Bezos wants to start rocket companies. You know what I'm saying? He wants to buy like he wants to do things. Jeff Bezos also knows that in 5 years he might want to do something outrageous that's going to cost 10 or 20 or 30 billion dollars or 50 billion. He wants to be able to stroke that check. And he can only do it if he has access to liquidity.
Right.
And so that's why Bezos is selling and selling and selling because he has so much. And you have to have a liquidity plan because you can't just go sell it all right in one quarter. That's not how it works. I don't have any issues with it at all. I think there is risk in Palantir, though. I think you have to understand that there's risk. Like there's risk in every company, and there's risk in Palantir. So Karp knows that. And he doesn't want to have 100% of his net worth in a company where risk exists, right?
Do you think at all about Peter Thiel? Does he come into play on your Palantir thesis or
same thing? Same thing. He's involved. Peter Thiel's involved in a lot of crap, man. It's not just Palantir. Like this guy, you got to realize that these guys have a new shiny spoon every week.
Yeah.
Dude, when you're in that position, these sorts of like alpha billionaire guys, man, they got something new every week. They might want to put all their money behind a politician for all you know. They might want to take over a country, dude. Like you can't get in the mind of a Peter Thiel, dude. Like, by the way, I will say this. I will say that a lot of these guys all are fully understanding of the tail risk that exists for all of these companies. That's real. And that's something that all of us, especially us Palantir investors, have to understand. So again, I'm not super concerned about it in the next 12 to 18 months for Palantir, but I don't know if I'll be in Palantir for longer than 12 to 18 months. Because as we start to get closer and closer to AI doing ridiculous things, you just have to be, at some point, you have to be careful, right, of the application companies that are applying AI. Now, I still think there's a higher probability that Palantir is around in 10 years and way, way, way bigger than it is today. But there is a chance that it like kind of just disappears over the next 10 or 15 years.
Two last questions for you. Crypto. Did you ever play that trade, and are you in that trade right now?
Yeah, I've only had one crypto thesis, and it's the same thesis I have today, which is I don't overthink crypto. I'm not going to try to determine whether crypto is going to be the future currency of the new world order or not, right? Like that, I don't care about that. All I care about is the fact that other people care about crypto, and for every one gold bug from my generation, and those people are super, super annoying. But for every one gold bug, there's like somewhere between 1,000 and 10,000 crypto people of the younger generations. And that's all I need to know. That is the strongest crypto thesis you will ever hear, because what that means is that assuming that crypto remains stable and doesn't get hacked, okay, Bitcoin, I'm referring to Bitcoin mostly right now. Assuming that it shows that it doesn't get hacked by some sort of future generation supercomputer, and assuming that governments don't shut it down and it remains a viable thing that people are allowed to invest in, I have a hard time seeing how more and more people don't put a small part of their net worth in crypto over the next 25 years, as we see this, like it's an $85 trillion transfer of wealth from the older generation to the younger generation. And that's happening over 20 to 25 years. As that happens, we will see money start to move into Bitcoin in small bits on each of those people. But it's $85 trillion that is getting transferred. And crypto is now an institutional asset class. And it takes many years for an asset class to truly be institutionalized. So I'm going to go back to the salesman in me. You have to develop marketing assets. You have to go through training. You have to all these financial institutions have to get comfortable with it. They are never going to be on the bleeding edge. They're always going to be on the back end of this, right? So what will happen is every registered investment advisor over the next 2 decades are going to have thousands of conversations with families and with individuals who are inheriting money or coming into money, or who are signing up with them. And the conversation will come up that will either be broached by the RIA or by the individual to say, hey, what are we doing about crypto? What are we doing about Bitcoin? Should we put anything in Bitcoin? And not every one of those conversations is going to result in, yes, let's put 1 or 2 or 3% in Bitcoin, but some percentage will. Whether it's 10% or 20% or 30% or 40% doesn't really matter. You have to look at the overall trend of 80-something trillion over 20 to 25 years, going from this generation to this generation, and people feeling like they should have some sort of hedge or some sort of participation in, or they just want to say they own it because they feel embarrassed if they don't own it because everybody talks about it all the time, right? So you don't in my opinion, I don't want to overthink Bitcoin. I don't want to overthink crypto. My thesis is very simple. I just explained it. and I'm never going to go deeper than that as it relates to Bitcoin or crypto. And so I have, I think the weighting for me is somewhere between 5 and 10% of my portfolio in crypto, and I'm comfortable there.
Are you a Nike fan with the sneakers behind you, or you're just a sneakerhead?
I hate Nike as a company right now. Those Nikes are like 15 years old, 15, 18 when I collected. I love the Air Force Ones, but as an investor, I hate Nike. My friend Bobby Hundreds just wrote the most prolific monologue on Nike. It's like a 25-minute read, 30-minute read. And he wrote it like 3 days before Nike's CEO stepped down, or 2 days before he stepped down. And it's basically, it's why Nike failed over the past 5 years, 5, 6, 7. And it's an incredible read. If anyone wants to read that, just go look it up. Bobby Hundreds, Nike. I'm some of my biggest trades have been in Nike competitors over the past 5, 6, 7, 10 years. You know that, from Hoka, right? To
again, social arbitrage. It's just such an incredible thesis.
Yeah, they're getting attacked from every which way. Adidas is still hot right now as a big brand, but it's like everyone's thriving right now in that place except for Nike.
Okay, last question for you, Chris. First of all, thank you for coming onto the show. The 1,500 people here really appreciate your thoughts, your time that you're spending with us. I gotta get your take, because I've never fully heard it from you. We've had some conversation about this. Humanoid robotics. Yeah. Where do you see this industry going? Why are you so excited about it? And is Tesla ultimately the winner?
Yeah, this is everything to me. This is my thesis of all thesis. Like, this is half my life revolves around humanoid robotics right now. Like, I made the biggest investment I've ever made in my life in humanoid robotics this last year in 2 of the 3 humanoid companies that I think matter. There are 3. There's Figure AI. I'm an early investor in Figure, and I love Figure. Apptronic out of Austin. I'm an early investor in Apptronic, and I love Apptronic.
And you got me into Apptronic, which I'm very grateful for as well. Thank you for that.
Yes, and Tesla, who I think is going to be a monstrously big winner in humanoids through their Optimus division. I'm invested in Tesla. I invested more recently, but I'm not nearly as invested as I want to be in Tesla, and I really hope the stock just stays down for a while longer. Embodied AI, which is basically robots, is AI with a large barrier to entry. Okay. Yeah. So when you look at AI, all the conversations we're having right now about AI are very confusing, and nobody really understands who the winners are. No one really understands where the barriers to entry are. No one really understands where the pricing power is. We all have thoughts on this, and we discuss it and we argue over it, but no one really has a lot of conviction when it comes to AI of how to monetize it. Who is going to be able to monetize AI? Embodied robotics is totally different. You have an AI brain inside of all of these future robots, but these robots have, fine-tuned custom actuators. They have scalable hardware platforms, manufacturing, logistics, supply chains, distribution. You have servicing. You have, there is so much work that goes into embodied AI products, specifically humanoids. Yes, any smart person can build a humanoid in their garage right now. And there are people that are building their own human. I've spoken to brilliant kids who are building humanoids in their garages right now and think they're going to have the next humanoid company. They don't understand how incredibly difficult it is to have a scalable platform with supply chain to be able to manufacture millions of these robots and maintain millions of these robots and service millions of these robots and actually be trusted by the world's largest enterprise companies, by manufacturers, by warehousing companies. by logistics companies. 1/3 of the world's GDP is physical human labor that is going to go away over the next 25 years and displaced by robotics.
Why is it going away? Why is it going away? How are you so confident about that?
It's just a natural evolution of humans. If you look at the last 500 years, it's gone away. And it's going to continue to go away. This is not a new thing, right? We don't work on farms like we used to, right? Like we're not blacksmiths like we used to. Like we all used to be physical laborers. All of us used to be physical laborers, like 95% of us. Now it's a lot less, and it's going to continue to get a lot less because as humans, we don't want to do back-breaking work unless it's something we really enjoy. So there will always be elements of physical labor that we'll continue to do, but we do not want to have people working in factories doing this. Okay, do you want to live your whole life doing the same thing repetitively over and over again in a factory for 40 or 50 years, and then you can't walk by the age of 60 and 65? You literally can't walk because your back has torn disc in it and you're so messed up physically. Do we want that for our kids or our children? Absolutely not. We want them to be able to live great lives. We want them to be able to have ambition and pursue careers and contribute to humanity in beautiful ways.
Right.
We want them to have jobs, right? But we don't want the work week to be 70 hours, right? We want the work week to go down and down and down so you could do better things with your time. That's how we've evolved as humans throughout.
How do you reconcile the argument that that's a very privileged perspective? Because work is work, even if it's backbreaking work. At least there's money on the table, versus being a YouTuber, for example.
We want every human to be in a privileged place eventually, right? Like, I mean, yeah, of course it's privilege. I don't want to take away someone's job working at a factory. I want their kids to not have to work in a factory.
Right.
I want their kids to have a better job than that. The truth is the majority of use cases for humanoid robotics are not displacing human workers anytime soon. We have hundreds of millions of jobs that are needed where we don't have human workers because there's a lack of physical laborers in the world, right?
Yeah.
We have new industries that want to be created, but they can't because there aren't enough workers. The reason why these humanoid companies, I'm not going to give away too much right now, but I will tell you this. These humanoid companies, if you knew every company on earth is in line right now signing letters of intent to like get as much allocation as they can of these humanoids. I'm going to say that that's happening with every major humanoid company right now. And that's why you see guys out there like Brett at Figure AI and Elon at Tesla like have so much confidence when they say things like, oh, this is going to dwarf the auto business. Like Elon has said this. The problem is we don't listen to anything that Elon says because half the things he says are just ridiculous. So people don't know that this part is true. Like when Elon talks about this is real. This is actually real. I've been behind the scenes seeing all this for years at these humanoid companies, and I'm telling you, it is real. The only way that we as retail investors, well, not me, but generally the people watching the show today, can invest in this is to trade Tesla right now.
Yeah.
I'm hoping it feels a little bit early, and that's why I haven't gone all in on Tesla yet. If anyone wants my humanoid thesis on Tesla's Optimus, it's the pinned tweet at Chris Camillo. It's like it's a 15-part tweet thread that's still relevant. I wrote it in January, but it's still relevant today. I think Tesla is going to be one of the most exciting humanoid trades on Earth at some point in the next 24 months.
So where do you like 10 trillion, this crazy age of abundance? Is this based on Elon having the vertical integration of the manufacturing needed to get these out at scale? Is that why Tesla wins?
Yeah, it's just Elon being one of the top 3 or 4 non-Chinese humanoid companies. There's Elon is probably in the best position as it relates to scalability of his platform because he's willing to go out and do the things necessary, make the investments necessary to fly the second that his humanoid is ready for prime time. I think the other humanoid companies are not going to be as aggressive as Elon is going to be when it comes to manufacturing and scale. Because Elon's a nutbag and he's willing to take on that risk when he sees something that he believes in. And that's why we love Elon, right? And so I think I'm not saying that Optimus is going to be a better humanoid than Aptronic or Figure's humanoid. I think all 3 of them will be very capable in terms of doing commercialized work. There's something like 900 million boxes that have to get moved from point A to point B every year. No humans want to do that work. It's dangerous work. It's backbreaking work. You don't even need an AI brain in a humanoid to do that work, by the way. So there's like 10,000 other jobs, right, that are behind that, that are just waiting. But every company on Earth is wanting to expand right now, but they can't because of human labor. It's too expensive. They just simply can't get enough humans to do it.
And if you agree that populations are not really growing the way they were before, that's a whole nother issue, right?
Exactly. I've said this. I think Elon is playing everyone when he comes out and talks about population being the biggest issue because he knows he has the solution already. You know, he has the solution. He's planting the seed that population decline is going to lead to the downfall of civilization, which theoretically could be true if not for the fact that we have embodied AI and humanoids on the cusp of hitting scalability in the next like 3 years. So he's like, oh, I've been talking about this problem for 5 years. Oh, look what we have now. So that governments don't try to stop it in any way, like overly tax them or anything like that. So
I never thought about it from that perspective because Elon does build up narratives, like the free speech narrative he built up, and then he bought Twitter as the solution. Kind of the same thing here with robots.
Exactly. And I listen, I think that one was a little bit more pure, but in terms of his intent,
I agree.
But I'm very excited for Optimus. I want Tesla to be my biggest position in my portfolio at some point. It's not even close to being there. It's a small position right now. I want it to be my largest position. I'm very nervous about his auto division. I'm really nervous about it.
What, you're worried about FSD? What is the worry here?
I've always said FSD was like 15 years away when everyone was saying it was 1 or 2 years away. Not anymore. I'm going back like 10, 11 years, right? So yeah, FSD, yeah, we're getting closer now, but it's always further away than anyone realizes. And like, there's clearly been people who have been right on that and people have been wrong on that. And Elon was just clearly wrong on his time frame for FSD.
Right.
So we're getting closer now, but it's not like 6 months from now. I don't think. I think we're like, low single digit years away, but there's still a lot of regulatory stuff that has to happen. And at the end of the day, like FSD is really important, but it's not going to happen overnight. I don't think. It's going to happen city by city, state by state. It will happen over the next decade. It will be a really, really big deal eventually. Like eventually it will be monstrously huge. But that's one of those things that takes a lot of time because of safety concerns, even if they're irrational safety concerns, right? Like I agree, they're irrational safety concerns, but that's just the way the world works, right? So
and for Optimus, you think the use cases in the warehouses, not the people doing your laundry. You think the real use cases are for like Amazon, not for a person.
Oh, no doubt. Yeah, the first 5 years of allocation is almost exclusively going to logistics, warehousing, and manufacturing. 100%. Yeah. So, and the reason for that is those industries place a very high value on those jobs. When you have a humanoid working 23 hours a day, you could charge $100,000 a year per humanoid, right? So like you could literally charge $100,000 a year per humanoid, and that will be the best, highest monetized use of a humanoid's time. So it's going to, and by the way, when you're a humanoid manufacturer, you need to focus on clients that are willing to purchase thousands to tens of thousands of humanoids from you on a lease program.
Right.
And there's only so many companies that can afford to do that at $100,000 a year. The amount of time it takes to basically onboard a humanoid program into a logistics, manufacturing, or warehousing facility, it's kind of like what Palantir does. You got to go in, you got to learn what the processes are. You have to have teams on site. This is why you have companies like Aptronic partnering with Mercedes, and you have Figure partnering with BMW, and there's like literally dozens and dozens and dozens of companies just like that we haven't heard about, that all these companies are that are in queue, right? So it's because once they initiate that relationship, they want them to turn into 9-figure relationships pretty quick.
Right.
Okay. And they will, but they're going to hog all the allocation. And so, yeah, no, they're not going to give you a human. There will be like subpar. I think there will be other humanoid companies that will be like, yeah, we'll sell you a humanoid for your house, but I don't think Tesla or Aptronic or Figure is going to go down that road in the first 3 to 5 years. They just have too much demand for enterprise style companies that need manual labor.
Right.
To do very simple things, by the way.
I mean, if you see the videos, some of this stuff is complex where they're like reasoning with taking out the trash. Other stuff is like putting this here, putting that there. It's like, of course that can be automated.
That's where all the money is. It's so funny when we first started talking about this stuff. I talked to a guy that owned a bunch of yogurt shops, and they wanted to expand to 7 more yogurt shops, and they almost pulled the trigger, but they didn't pull the trigger because of the human labor issue. He was like, if I had a humanoid that can just literally just do this, like if I had that and I knew that I could have that for a reasonable cost, right? And not deal with all the issues of hiring and letting people don't show up for work, and then I'm like have to have managers over the stores when they don't show up for work. It's like I would open those 7 shops tomorrow. I mean, it's just one stupid small business story, but there's millions of business owners just like that feel the same exact way. Labor is always the bottleneck. It's always the bottleneck. And by the way, it's usually not because the labor is too expensive. It's because you actually can't get the labor. You just can't get it. You just can't rely on it. There's just not enough of it out there that's willing to do that job or do it consistently for you.
Right. All right, folks. That is Chris Camillo. Chris, thank you so much for spending the time. I think the audience really enjoyed it. It spent a good hour and a half. It really means a lot. There's his Twitter there in the chat. Chris, actual last question for you. What is next? I mean, you've made a lot of money in your life. I know you're competitive, but like, do you buy Lambos? Do you just want to see the numbers go up on the Schwab account? What really is the end?
No, I don't buy anything. And by the way, anyone wants to find me outside my Twitter, it's dumbmoney.tv, has all of our socials for Dumb Money. But no, I have a foundation for kids and animal welfare, and that's my passion in life. So I started during the pandemic. It's something that I'm really proud of, and I'm hoping to grow that into a multi-$100-million, maybe $1 billion foundation someday. And I work with only like small to medium-sized charities that are doing really interesting things for kids and animals. And that's like I have 2 passions, 3. 1, my family. 2, that pretty much all my excess money that I make goes into that foundation to build that foundation up. And then 3 is I want to onboard every human on earth into the investor class as a way to solve the wealth gap. So
I like that.
Yeah.
I love that.
Everybody spends so much time focused on the income gap. Good luck, especially where we're headed with the age of abundance. Income is going to get flattened. It's going to become really, 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 really hard to have a high income job in 20 years. Okay. And so the only way to solve the wealth gap. The wealth gap is what we need to be focused on, because there's going to be the people that are getting the $85 trillion in wealth handed down from family, generational wealth, right? Those are the lucky people. Congratulations. They're lucky. Okay. I was never one of those people either. Okay. But they're lucky. So how does the rest of the world figure out how to survive the next 20 or 30 years when the value of human labor is just going to be different? It's just going to be different. Like we will have, I think we'll have access to healthcare. I think we'll have access to having a home and food. And like, I think the quality of life is going to go up and up and up and up over the next 20 years if AI doesn't destroy the world. I think it's going to go up and up and up. How do you kind of even out that wealth gap? There's only one way to do it, and it's to be in the investor class. So I just want to try to inspire regular people like me just to start investing. Because listen, you look at my background. I was not an institutional investor. Even my hedge fund was a retail trader starting a hedge fund. So anybody can be an observational investor. You don't need to be proficient at mathematics or technicals or charts or fundamentals. You don't know how to, you don't have to know how to read a balance sheet or an income statement. All you have to do is be able to surf social media, read comments on TikTok videos, understand how the world is changing, and connect dots back to investable opportunities of companies that would either benefit or be harmed by that change that you're seeing unfold in real time, because you're knee deep in the real world, unlike these guys in Wall Street that are distracted by noise and CNBC all day. So like, that's it. I just want to inspire people to open up a trading account and just start doing it.
And the way you do that, I'm assuming, is just building your brand and making more content, I would imagine.
That's it, man. Yeah, and I do it in a way that's fun, man. Me, Dave, and Jordan, we're best friends. We just when we do our show, we're really doing the show mostly so we can catch up with each other and just shoot the crap.
It's a blast. It's a great show.
I mean, we don't, like, as you see, like, we don't really do our topics to like hit the algorithm. That's why our channel is still really small. It's 100,000 something, right? Like, we're not trying to be like the next big YouTuber. We're just having, we've always done our show just to have fun together on YouTube. When we were during the pandemic, we did it as a way to hang out every day, digitally. So like, we're just doing it for fun and just to share our thoughts with the world. And honestly, most of my investments these days come from my community. So they help me surface stuff. So I get more out of our community at Dumb Money than they get from me, I think. We have a Discord where we chat about stuff. It's like all free. We don't sell stuff. Like I don't make one. I lose so much money on YouTube because we pay for editors, like for our short clips. Like, we don't make money off of our community, but yet I make so much money off my community because, every couple months they surface a trade for me. I'm like, damn, I would have been late to that if not for you guys.
Right.
So anyway, thank you for the work you're doing on Palantir. Appreciate it. Keep doing it.
I love it, Chris. Means so much. Thank you for joining. We'll see you next time.
Guys.
Thank you so much. Bye.
Later.
All right. There we go, folks. That was fun. That was a good 3 hours, and that was really fun diving into Chris's history and how he got there. While we were talking, Palantir fell 3.6%, but NVDA, the godfather of AI, decided to wake up today. 4.27%. Did anyone figure out why this is happening? Is there any headlines going on? Todd Alden, thank you for becoming a channel member. Really, really appreciate it. Thank you for becoming a channel member. But if anyone knows, let me know, because I don't see why the hell NVIDIA's up 5% right now. CRM's up 2%. S&P, NVIDIA took the S&P into the 570s. I like it. Tesla 252. Again, Palantir was up a lot yesterday. Makes sense that people are taking some profits. SoFi continues to fall, down almost 4% of the day. Robinhood down about 1%. Square down about 1.65%. PayPal up about 1%. I guess Alibaba almost 97, up 7% on the day. It looks like the market woke up and decided that NVIDIA is going to still be the winner. And that's why NVIDIA is NVIDIA. And we're getting some momentum. Sachin, thank you for being here as well. Thank you for everyone for joining for this interview. This was a fun one. I mean, Chris Camillo, again, I saw some people, disagree with his style, or they don't like the way he invests. At the end of the day, this is the good thing about investing. It's personal, right? If he has been able to take 20,000 to 60 million and it's worked for him, then that's great. If other people love to obsess about JPOW and look at the macro all day to make their money, then everyone has their own approach, right? And that approach is very important when it comes to figuring things out. I also like that he talked about some of the losers because, you know, I believe him when he says he averaged 70% returns, and because it's auditable through that actual organization that audits performance returns. Yeah, that's a big deal doing 70%. Now, granted, 70% on whatever tens of millions he's working with versus, you know, a hedge fund working with 30, 40 billion is a different scale of magnitude. However, there are losers when you try to get those 70% returns. And some of those losers can be trades that you think are going to work out, like restaurant brands, because people are literally killing each other for the Popeye sandwich. I don't know if you guys remember in 2020, someone died in one of the lines for the Popeye sandwich. And then Canada messes everything up with Tim Hortons and things go to shit. So I think a lot of these things are really important to look at just from the winner and the loser perspectives. And then ultimately his take on Palantir. I mean, look, first of all, I didn't know that he was only in this for 12 to 18 months. I found that out today. I didn't, I thought this was a long-term play for him. This is not a long-term play. This is 12 to 18 months. Maybe if the thesis gets even better, he'll stay in it, but it seems to be more of a trade for him. And number two, what he seems to like, it's not the Ontology, it's not Karp, it's he worked in software sales. Software sales has fundamentally transformed itself into a new paradigm that Palantir is ushering in, which is boot camps. And from someone who's been doing sales his whole life, he realizes, hey, boot camps is going to be a revolutionary super cycle when it comes to allowing people to adopt AI into the enterprise, while acknowledging the risk that I don't think we talk about enough, that AI will commoditize software. I'm doing a lot more research on this, and I'll probably make a video on it probably in the next couple months to really understand what's going on here. I got to talk to a lot of people that are much smarter than me around AI commoditizing software. But if you're a sales guy and you're looking at these boot camps, I don't know how you don't get super excited. And it seems like he is very, very excited about that. Sachin says, if you have read Market Wizard series, Chris is the only one with the most different style. Yeah, that book is incredible. And I would recommend people check out the Dumb Money YouTube channel as well and listen to a little bit more of their stuff. I discovered them back in January, and that's when I started like just listening to Chris and how he thinks. And I remember the first time I heard him say, I don't look at a balance sheet. And I was like, huh, that's interesting, because I'm trying to like learn how to actually read a balance sheet. This guy doesn't even care about it. So there's, again, just two different approaches. Not one is right, one is wrong, but there's two different ways to kind of analyze how this stuff plays out. Okay, do we have any news on NVIDIA? Twitter's probably going crazy right now on NVIDIA. I'll clip up this interview, by the way, and I'll put it on YouTube probably in a couple hours. So for anyone who missed it, you guys will be able to see it there. NVIDIA headline just came out that Jensen is done selling. Huh. That's why it's up. Jensen sells $713 million of stock, and it's done. Market Wizard series has 5 books starting 1987. You know, I'm going to have to order these books because I've heard of, I knew he was in these series, but I never actually read the books. I also want to order his book Against Wall Street. And I would Laughing at Wall Street. Yeah. So Laughing at Wall Street is the book. If you want to get more information on that came out in 2010. And then we have this Market Wizard series since 1987, those 5 books. So yeah, Jensen's done. There you go. Jensen sold $713 million of stock, and now he's done. Wow, I did not know this would be the headline that would push NVIDIA up 4%. Kind of silly that this is what's getting NVIDIA up 4%. I mean, it makes sense. If he's not selling, then after dumping almost $1 billion, which is still 0.3% of his overall stake. It's not like Karp. Karp sold like 10%. So it is a difference. He just has a lot of NVIDIA. But still, the stock to be up 4% on that is, I mean, I guess that's the market being the market. That's the market being the market. Sachin says, best investing book series. All big investors have been interviewed for it. All right. I will definitely order that book. That sounds like an exciting book to get deeper into. You know, it's interesting. I mean, I think what we're seeing in NVIDIA right here, the price action is very similar to what Chris Camillo was saying, which is that NVIDIA is up 4% because a bunch of people inside of their offices in Wall Street were like, oh, Jensen's done selling. Let's buy it. It goes up 4%. And a person like Chris, he's trying to figure out, when do all the people in those Wall Street offices hate NVIDIA? When do none of them believe GPUs is going to be a thing? And then when can he, make the investment thesis there? Because the alpha off of a 4% gain because Jensen's done selling is not real alpha. It's fun in the middle of the day to see this happen. But like, this isn't real. Like this, I don't think this is not fundamental. But understanding GPUs like Stanley Druckenmiller understood them back in October of 2023 or 2022, That's when the thesis makes a lot more sense. So again, just different styles. Now there's some people in this 4% gain you're seeing right here, 115 all the way up to 120. There's people that probably made tens of millions of dollars just trading this right here. And those people are not really the types of social arbitrage investors that Chris is talking about. Those are more people that are just finding a headline, trading on the headline, and then getting out and making their profits that way. So a lot of different approaches, but all those approaches do exist. 7.5 billion for Arizona expansion as well. Is that for NVIDIA or is that for Intel or TSM? I think you're right. It's for NVIDIA. Interesting. So I think that's from the CHIPS Act, right? That's where we're getting that 7.5 billion. And we're seeing some of that momentum. Also, last week saw a tip somewhere that an investor did a vertical spread for September 27th, 121 buy to open, 124 sell to open. So he did a call debit spread for September 27th. Basically, he's saying basically that investor is saying 124 is what he bets NVIDIA will be at in 3 days. How big was the trade? You know, it was like a really big call spread. Taiwan Semiconductor secures 7.5 billion for Arizona expansion. Okay, so that's definitely bullish for NVIDIA. TSM, I would imagine, is up on that news. TSM is up almost 4% on that news. TSM is 60 billion away from being a $1 trillion company. Every time it gets close, it gets rejected. It got to like 995 billion, I think, at the peak of July, and then it came back down. But there you go. That's bullish for NVIDIA for sure. That's obviously bullish for TSM. Now I realize why the semis were up at 945. It's probably because the market knew that the Jensen headline was going to come out, that the TSM headline was going to come out. And now all semis, look at that, continue to be green. Like at 945, I had no idea why semis went green. No idea. Now I understand. These headlines were just waiting to come out. Now they're out. You got Qualcomm up 2%, SMCI up a little bit, Intel up 2%, Micron up 1%, Dell flat on the day, but it's green. ARM is up 2%. And then NVIDIA up 4% on the day. 60,000 contracts. Yeah, that's a lot of money. All right, so that person's taking a big bet. Now, he might be selling those if he doesn't think we get... Well, no, I think it still needs to get higher to be able to... Well, I mean, it depends on when he bought them. They could be up a ton. But if he's betting on 127, then maybe in the next 3 days, we see that. All right. I think that's it for me, guys. Long market open. Hopefully you guys enjoyed it. That was fun. We'll try to get other guests like Chris Camillo back on the show. Bitcoin right here at 63,000. That's holding on to some levels. And again, China up 7.2% with BABA. China printed, and the printing is going well. I'll be back at 3:45. Do we have any big earnings today? Tomorrow we have some bigger earnings. After the close, we have nothing. Today's what, September 24th? Yeah, nothing too crazy. Tomorrow will be Micron, so that'll be a bigger one. And then Thursday is Costco. But outside of that, nothing. Oh, we have Jason today, probably for Technical Tuesday, most likely. So I'll confirm with him if he's on today. But if he is on, then get your tickers ready, and then we'll be live for probably like 3 hours today, going through Technical Tuesday as well. Word of the day is bungalow.
Bungalow.
A one-story cottage. Bungalow. I'm pretty sure people have heard this word before. They spent their summer vacation in a cozy bungalow by the beach. We rented a small bungalow for the weekend getaway. It's not that exciting of a word. We've seen this word before, but bungalow is the word of the day. All right, that's it for me. We'll be back 3:45, most likely with Jason. We'll run through the technicals, and we will keep going from there. NVIDIA right here, 121 up 4% on today. Thank you, everybody. Hopefully you guys enjoyed the interview. I'll see you guys in a couple hours. Bye, everyone.